Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Joining me in studio, our senior economist, Tracy Shuchart. Good morning, Shai.
Good morning, all.
Jimmy is still out today. We look forward to having him back. Our boy Mike Burke will be delivering the Edge Report this morning. So when we get to that, Burke will be delivering it. Overnight, it's the silver and oil show. That's what I wrote in my note. I mean, you look at crude oil, up 0.75%, 65.71 right now on the ticker. Silver is up 1/3 of 1%. But ultimately, they're breaking out. I mean, it's not necessarily what they're up today. And even if they were down today, I'd say they're the story. Crude oil continues to push higher over recent highs. Silver as well. I didn't include platinum in there as much. We know that we've been pounding the table on platinum. I think that silver probably relates to more people than platinum, but platinum is a story. So should I talk to us? Those are the three markets that are front and center right now.
Yeah, absolutely. We kind of had a quiet night, so it seems like these markets are just grinding higher. The commodities market, that is. Trade talks will continue today. Of course, Trump came out and said trade talks with China aren't easy. Markets didn't really like that yesterday, but they continue today. So we will keep everybody apprised of what is going on there. In the crude oil market, yesterday, WTI options are the least bearish in 4 months. We were talking about this yesterday. So he said WTI options turned markedly less bearish on Monday as outright prices climbed again, with the second month put skew the smallest in more than 4 months. So the options market is starting to turn around on that, or at least not be as bearish.
Yeah.
So kind of a tailwind for the market in that sense. What was interesting is that, we talk about inflation again, might be rearing its ugly head. So we had some soft indicators coming in, both the Institute of Supply Management covering larger companies and the National Federation of Independent Business Surveys of smaller firms show growing complaints about prices. So soft data says that we are starting to see an increase in prices. Now, whether or not that shows up in the Wednesday CPI report we'll have to see, if that filters in yet. But according to the surveys, people are starting to see rising prices once again.
Yeah, and so I think inflation is coming again. I don't think it's going to be as bad. I'm not an economist, but I'm just kind of guessing here. But I look at what's happening with oil, what's happening with silver, and I think that it's going to matter, but I don't think it's going to be that big of a deal. I think ultimately what happens here is the Fed just does nothing, right? I mean, that's just kind of what I'm forecasting. It's just a little old Anthony here in the NinjaTrader Live studio. I mean, I don't know anything that I know nothing that I don't know. And I look at this and go, well, it feels like inflation is going to be coming back from some of the things we see. I think if anything, it keeps, like I said, the Fed just on hold. And ultimately, I think that this is bullish for stocks. I mean, unless they do something crazy with tariffs, which I think the crazy part is behind us. I mean, right. You get back to stocks now. Yeah, inflation will come in. There will be these scares, is what I'm basically looking at, that I think come in and say inflation will come in and we'll have ebbs and flows of it. But I don't think it's going to get to the point where the Fed's raising rates again. Right, Shai? I mean, that's more of what I'm saying.
Yeah, no, I don't think they're raising rates. The market is pricing in 100% chance of one rate cut this year and 77% chance of another. So that's markedly down from the beginning of the year when the market was forecasting 5 rate cuts. So,
yeah, exactly. And, again, I've been following the softs lately just to keep an eye on what they're doing. And really, they're not doing much. I'm not watching like coffee, sugar, and cocoa. I mean, besides in my cup every morning, but I haven't been watching the prices of them. But, corn, I've been watching wheat. Since we had Angie on, I've been keeping an eye on them, going through my morning routine with them. Wheat can't hold any rallies. Corn, another one, just the lowest it's been. So the softs aren't coming. If I were to start to see inflation there, then I'd be like, whoa, that would be something to see. But we're not. It's mostly right now, it's the crude oil and silver story, which again has an impact And it will impact inflation. Crude oil touches everything. I mean,
Right.
we talk to you about this all the time. And silver has utility impact. This is not just a metal that people are buying and storing in safes. So those two things, I think, again, they come into play, but nonetheless, I don't think it's going to be too impactful on inflation.
No, I would tend to agree with that. And platinum also has utility purposes as well. So we're seeing, and with the rising prices and that. And so, but that will take a while to kind of filter into the economy. I don't think, I mean, we have rising oil prices, but I think you're going to need to see like $70 until it kind of really starts impacting anything. So let's see if we get there.
Yeah. And bonds this morning, they've upticked here a little bit. Interesting coming into CPI. Not today, but we know that it's coming tomorrow. But when I look at the bond market, again, look at this is a sweet spot for equities. I hate saying this because it means it's probably going to be a quiet tape in the indexes, but it is what it is. I mean, we're in this scenario right now where other parts of the market are still kind of hot. We talk about platinum, silver, crude oil. There might have big significant impacts on the equity markets down the road. Don't see it necessarily right now. You look at the bond market, it tries to break lower, it can't. It comes back into a range. This is a repeated theme that we've seen. Bonds, if you go back and look at the chart for the bonds over the last, let's call it 12 months, and I'll go over that later with Pharm. You look at it and go, you had the big down move earlier this year that were going down with stocks, with velocity. Then that sell-off has really been sustained. Now it's just been kind of a holding pattern, and ultimately, again, if the long end of the curve just kind of stays where it is, I think that's really a good sign for equities, because when the long end starts to move with velocity in any one direction, then I think things start to get a worry. We'll see what comes off of CPI tomorrow, but getting to the equity indexes, it's like, I mean, what's leading us higher right now? Russell's up 0.5% almost. Why does that matter? Well, it matters because now you have all parts of the market participating in the rally.
Right.
You've got some stories in silver and crude that we'll keep an eye on. Again, ebbs and flows, platinum as well. Bond market can't really break too hard, can't really rally too hard. We're talking about the 30-year. That's not bearish equities. That's like, hey, they're contained there. Markets like to see rates stay at a consistent level so they can operate. And so, I don't know, Shai. I mean, it is what it is. And I know that it's probably going to still be a quiet week. Hopefully CPI does spark something. But we got any data today or anything else overnight that we need to know about?
Yeah, so we have Redbook at 8:55. Redbook's kind of a weekly U.S. retail sales indicator. Traders, economists like to use it to kind of track consumer behavior trends and compare against other broader measures like the Census Bureau's retail sales report. So not very market moving, but something to keep an eye on as far as the health of the consumer. And then we had the small business survey come out earlier today at 6 a.m. And that was it was a huge beat at 98.8. Was expected at 95.8. It's the first move higher in 4 months, so notable.
Yeah. Like I said, ebbs and flows. That's what I see. I mean, we know that majority of the people coming in here are going to be equity index traders. And when you look at it, this tape right now, don't overthink it. Don't overcomplicate it. We are where we are. I mean, either you embrace it. The hardest thing for me moving into a swing trader years ago was there's going to be weeks, if not months, where the equity indexes are not in play. I mean, that's just the way it is. I mean, I can't manage risk up here for what I do. I'll be starting to look at some stuff in crude oil, but I'm picky about my trades. And I think for day traders, if you're coming in trading this every single day and you're like, it's low volume, low volatility, you got to embrace the fact that's what it is. Get better at executing in this environment, because it could be like this for a while.
100%. And everybody's used to these wild moves that we've been seeing, 100 points, 200 points a day, right? And we're just not there right now. And so, don't expect those kind of moves that we've been having, and take it one trade at a time.
Yeah, and don't, never take it lightly. Always work stops, because we are a tweet or a post away that does change this whole narrative.
Right.
As we already know that that's the case. It's happened already a few times this year, at least. Good morning, chat. It's funny. Every morning I come in here early. I'm watching Engineer Barry. He's always the first one in here, so I have to say good morning to him. We've got Paulie. We've got who else? We've got Grot D Trading, Lee, Infinity, My Serona, Anissa, Steve, MA, our boy Trading Poker, Rob, Vito. Good morning, everybody. Safian. So someone's asking about what happened yesterday at the 1, I don't know, was it 1 a.m. Eastern time? Pretty large down move in NASDAQ. So it's funny. I look at the daily charts. I don't even see it. Was there any news that would have been moving NASDAQ, Shai?
So yeah, we saw that spike kind of as soon as the Asian session opened. There really was no news at all on that. And then China tech stocks, and Asia, Hong Kong markets kind of tanked during that session and kind of pulled down global indices. Like everybody went down during that. But there was no actual real news that kind of sparked that weird spike in Asia.
Got it. And you know what, everybody, too, also understand, and good morning, RP, second day here. Great to have you here, Whit, Harry. Good morning, everyone. It's a thin tape right now. The littlest bit of news could be market moving. You know, the one thing about a grinding upward tape that's really not news driven is that everyone looks for a reason to sell. Even it doesn't matter if you've been long for 1,000, 2,000 points in the NASDAQ. The whole time you're looking at that tape for a reason to sell. And sometimes a little bit of selling or something could hit the tape and all of a sudden, bang. But remember, what have we seen is a repeated pattern over and over again. They're out there buying the dips. Unless the news is something that we would all can't look away from, it's not changing this tape. And so, yes, you're going to have these little moments where the tape comes down a little bit. And again, this is the environment we're in now. Volume is down, volatility is down, and you're going to have ebbs and flows, but ultimately pull yourself back from it, look at what's happening on the bigger picture, and realize this is still a grinding upward tape until we have news that Shai goes to us and say, don't look away from this. And maybe that is CPI tomorrow. Maybe we preview that. I mean, what is everyone looking at coming into CPI tomorrow?
So once again, all over the board, you have Bloomberg Intelligence think the data is going to come in softer. You have a lot of the banks thinking that it's going to come in hot. So kind of the analysts are all over the place on this. And I think part of that stems from the consumer sentiment studies that we've seen, right? You had the Michigan is like up at 6%. But we had yesterday the New York Fed one-year inflation expectation, and that was down at 3.6%. So we've got wildly different surveys, and I feel like that's what kind of market analysts are looking at, and so that's why it's all over the board.
We had the same thing for unemployment.
Right.
And, what does that mean in this environment? Because really this environment, I would think that it shouldn't have that big of a range right now for CPI. I mean, we know what they're looking at for what comes in. I mean, this is the part that always puzzles me about these data points. We know what they're looking at. There really shouldn't be a wide range of what's expectations.
Correct. And I think that just goes to show, I think, first of all, I think everybody hates this rally. Right?
Everybody hates this
they
rally.
Can't understand it. Everybody's just looking, they've told us for months that inflation's going to spike and unemployment's, going to skyrocket because of these tariffs. And we're just not seeing that in the data yet. It's just not being reflected. Again, we're still on a pause, but, we still have been told this over and over. And so I think that everybody's kind of expecting the left shoe to drop, and they don't understand why the markets are up because the headlines are so bearish.
I mean, no doubt. I mean, you look at what happened with with Elon and Trump. It's like the market. I mean, I said this too. I was in chat. I think it was Leo. And was it Leo and Stowe were in there? And I said, I think that this could have larger ramifications than what it really did. I mean, you get the richest man and the most powerful man. I didn't know where that could end. It feels like it's now been set back and it's not as big of a deal now. I mean, we've already moved on to a new news cycle. That's
Right.
just the way of the world. But markets I felt were going to be uneasy about that because so much has been invested in what Elon's going to be doing with President Trump and AI and just, all the things he's got his hands on. I mean, obviously they have calmed that story, but you look at what happened on that day, every rally was sold that whole day. But then once that story kind of got a little bit put on the back burner, what happened, right?
Back to the grind
Back
higher.
to the grind higher. And this is why I talk about everybody. It's like everyone looks for what drove us lower in the overnight. I get it. We're all looking for it. But that's the psychology of the market right now. And what ultimately is really happening is that the littlest bit of news and a thin, low volatility market, you get a little bit of a pullback and it's like, whoa, which was not even probably a 30-second bar move in the NASDAQ just a few months ago or a month ago. Now is big news, but ultimately the buyers are still there. It's not changed the tape. If there is real significant news, you don't have to be early for it. It'll be there and we'll notice it and we'll be able to take advantage of it. But
100%.
We'll talk more about this throughout the morning. We got a great guest today too, which quick preview of that guest because we got to get to Berkwood Edge Report.
Yep. We have Jim Welsh. He is a macro and technical strategist who talks about cycles. So we'll talk to him about the macro cycle that we are in and what he's seeing in these markets.
Looking forward to meeting him. I haven't spoken to him yet. All right, everyone, it's about that time. This morning's Edge Report. Take it away, Mike.
Well, good morning, everybody. Let's start right off with the 10-year bond. We talked about yesterday that we're in this kind of channel with 111 being the attractor. We were at that 110 level, and again we bounced off of that yesterday. We bounced off of it again today, heading toward that 111 level as we go into FOMC next week. So it'll be interesting, but again, very range bound here between that 112 and 110, and again, we've got that bounce off of 110. So I expect that we'll probably see the continuation here in the bonds this week heading into FOMC. Of course, what this does, and we talk about this all the time, this is kind of the center of everything, right? So with bonds going up, we're seeing interest rates ticking down a little bit below that 4.5 level. So what's that going to do? That's going to strengthen the dollar today. We're seeing currencies weaker and we're seeing commodities stronger. Let's go to gold real quick here. This is an interesting one. Both gold and crude were up yesterday on a weak dollar. So it kind of tells you that, you have to ask yourself, is gold and crude oil a little stronger than we think it is if it's going up on a weak dollar or a strong dollar. So today we've got the strong dollar. We're up today. So again, is gold and crude a little stronger than we think? So here gold, is at 33.53. We're above that key level of 33. The question is, will this go higher? And again, I'm a little bit, as I said yesterday, I was a little bit bullish here. Let's look at the weekly real quick. So you can see, there's a lot of separation here between that 52-week moving average and the Ichimoku cloud there. We are on the weekly chart. It does look like we're consolidating a little bit, which we could not see on the daily chart, which is kind of interesting. We can't get above that 3,400 level. We've wicked up there 3 times, and now we're going to make another run at it. We'll see what happens this 4th time. Let's go back to the daily chart. Let's look at crude oil. Crude oil is up about 0.4% today. We broke up above that 64, 65 level. So now there's not. If you look to the left here, there's not a lot of price action. So it's kind of a clean move here all the way to 70. So we'll see if that occurs. This is a very news-driven market, right? This market usually spikes up or down based on news, mostly up on bad news, that kind of thing. So we haven't really had that kind of news driver in crude oil for a while. So this is all pretty technical, right now. And as we're breaking out of that consolidation we've seen since April, I've got to be bullish crude oil here all the way to 70. Let's see. Let's take a look at the Russell. Russell led the way yesterday. It's leading the way again today. Of course, today we've got a We've got a little bit stronger dollar, so the currencies are down, interest rates are down. That's good for the Russell. So we'll see if this rally can continue. It's interesting that at this point, in with everything going on, all the anxiety that's in the news, the Russell seems to be the one that is performing the best right now. So we'll keep an eye on this. That break above, so a couple key levels here. The Russell's market I follow quite closely. There's really two key levels here in the Russell or during this week. We just crossed above that 2140 level. This market tends to move in 20-point increments with support and resistance. Except at the 90 level. For some reason, that 90 level is a really strong support or resistance level before it gets to 2200. So 2190 is going to be a really strong resistance level in my mind here. And a lot of times what you see is traders anticipate that level. So it won't actually quite get to 2190 as sellers come in ahead of the anticipation that that's going to be a strong level. So keep an eye on that. We have time for just one more quick market. Let's look at nat gas. Nat gas is down a little bit today. This is a market, most of the energy markets are well correlated. You've got crude oil and heating oil and gasoline. Those are well correlated. Nat gas is uncorrelated to those three markets for the most part. So for traders who are, looking not to put all their eggs in one basket, you can trade crude oil and nat gas and be pretty safe that those are not are not really correlated. Here we're bouncing off of that 3.8 level. Again, this is a market. And in fact, if you look at a lot of the commodity markets, they are all somewhat range bound since April. So this has been such a topsy-turvy, news cycle. Everything's kind of moving sideways, range bound. They're big ranges, I'll give you that, but it's pretty much range bound since April. Same thing with nat gas here. We're bouncing off of that upper level. So that's the Edge Report for today. Thanks everybody for being with me. I'm going to turn it back over to Anthony.
Thank you, Mike. And we are now joined by Jim Welsh, Chief Technical Strategist, Macro Tide. Jim, good morning. Pleasure to meet you.
Good morning, Anthony. Great to meet you. And hello, Tracy. Good to chat with you again.
Absolutely.
So, Jim, I want to talk. I want to talk a little bit about just market environment right now. Just get your idea of what's happening here. So we have, I don't know how much you heard of us talk about this morning. We have crude oil breaking out a little bit here. We've got the metals continuing to stay bid. They've been a dominant market throughout the whole year. Platinum and silver have really come to the party as of late. Gold has come off a little bit off its highs, but not so much. Still the leader to the upside when it comes to the metals. You got a bond market, Jim, that really can't go much lower on the long end. Every time we think we're going to see higher rates on the long end, it comes right back into range. And you've got an equity market that is just grinding higher. We all can see the tale of the three tapes we had this year, the big move lower, the big move higher, and now consolidation to grind up. And the latest news, I think, is that the Russell is now really starting to participate. And I'm a big believer that if you want to have a sustainable bull market in indexes, you want that Russell to be right up there with you. So I talked about just the overall things that we're seeing. What are your thoughts on this market environment?
Well, I think uncertainty is a key word. It's driving not just the financial markets, but obviously it's having an impact on the economy. A survey back in January found that 60% of CEOs, Anthony, were planning on increasing hiring and investment spending. By April, that was cut in half. So what we're seeing in terms of the labor market is not so much layoffs, but a reduction in hiring. So that's why the labor market's still constructive. In terms of the S&P in the stock market, the advanced decline line is, I think, a terrific technical indicator. As the S&P was making new highs in February, I was writing about the AD line, which had peaked on November 29th of last year, was divergent. That implied a period of weakness, and the degree of weakness is always dictated by how strong of a reason to sell materializes. If there's no reason to sell, the market can pull back 3-5%, no big deal. What we saw, obviously, in March and April, there was a real good reason to sell, and the S&P was down 20%. All that has flipped. The AD line has now made new highs above the November 27th or 29th high from last year. I think most investors are expecting the trade stuff to work out. Anthony, I think you guys touched on it. The reasons to sell really aren't significant at this point, and the abruptness of the decline, I think, has left a lot of institutions underinvested, and that's why I think we see every little dip is being bought.
So I just want to stay with you just for a minute on the metals then. So why do you think that the metals continue to stay so bid?
Well, there's an inverse relationship, as I'm sure you're well aware of, often between the dollar and gold. In September of 2022, the dollar peaked at 114.78, gold bottomed at 16.16, and the dollar has been going through a correction since that window of time. Near term, I think the dollar is going to drop some more. I think it's going to make a lower low below the recent low at 97, whatever the change is. That I think is going to allow gold to rally to a new all-time high. So my take is more weakness in the dollar near term. Gold makes a new high. But from a bigger picture, Anthony, I think the dollar is completing the correction that began in September of 2022. Big A down to 99 and change, B up to 110 and change. I think this is wave C. I think we're in wave 5 of C, which is why I think we're going to get one more new low. Once the dollar's low is in place, I think gold is going to have a fairly significant correction. 2,700 becomes a possibility. But near term, I think the additional weakness in the dollar is going to be supportive of gold, and silver's playing catch up, which is, I think, a positive for the metals complex.
Absolutely. And I kind of want to move to the bond market here a little bit. That long end has kind of been squirrely. We know Besant is very much focused on the 10-year, and everybody's talking about, we've had PIMCO, you've had Grundelach all come out, and they're very negative on the long end. We do have a 30-year auction on Thursday and a 10-year auction on Wednesday. So what kind of are your thoughts about the bond market? Have we stopped going down, or are we going to expect, yields to move higher again?
Well, we'll start with the macro, Tracy. I believe that the bond market entered a new secular bear market in 2022. If you look at a 30-year bond chart going back to 1981, bond prices rallied and adhered to a very strong uptrend and a trend line. That was broken in 2022. In addition, the decline from that high in 2020 was 5 waves. So in October of 23, I thought we were going to have a fairly decent rally. That unfolded. Near term, I think bond yields are likely to come down. I think the 10-year can get under 420, maybe a stab at 410, the 30-year around 460. But I think that the risk longer term is for yields to go up. The 10-year peaked in 1981 at 15.5. The low in 2020 was 55 basis points. The 50% retracement of that is around 7.5. So from my perspective, the long term is negative. And I think the drivers are what we're well aware of in terms of deficit, the amount of supply. The recent bill that was passed by the Republicans does not address some of the major issues of curtailing a 7% deficit to GDP and getting it down to 3%. So I think the bond market has a lot of challenges. And in the next few months, we are going to see inflation tick up. Tomorrow's CPI will probably be okay. But after that, the CPI and all this stuff is rate of change 12 months, right? So the next 4 months, we're taking 9 basis points from the May, June, July, and August of 2024. So if the numbers come in at 15 basis points, 20 basis points, by the time we get to mid-September and the August CPI, I think the headline CPI is going to go from 2.3 to 2.6, maybe 2.7, and the core could be at 3%. So there's a lot of stuff happening, Tracy. I think on balance, we see yields come down a little bit in the near term, but longer term, I'm bearish.
And how do you see this whole tariff thing working out? We're still on this 90-day pause. And, do you think we kick the can out for another 3 months or so? And, what do you expect the tariffs to make on inflation? Do you think it's going to be a big contributor to inflation, or are we seeing inflation because of other things?
Well, companies are already starting to increase prices. I think a speech by the St. Louis Fed or somebody said their contacts were showing companies are doing incremental price increases as opposed to one big increase. In addition, companies that are not directly involved, if you will, with imports, but because their competitors are also gradually increasing prices. Walmart said, yeah, we raised prices in May. We're going to raise them even more in June. So there's going to be a level of inflation. We just don't know the final number. Coming into this year, tariffs, the effective tariff rate was 2%. We're at least 10%. Tracy, somebody's going to have to eat some of that. And I think the consumer's going to eat some of it. Companies are going to eat some of it. But it is going to have an impact on inflation. I'm not a fan of tariffs historically, not been a good policy. I think there's motivation to try to generate revenue to offset some of the deficit. Where we go on July 9th, hey, you got a coin? Let's play 4 out of 7 and determine which way it's going to go. I think there's a realistic thing. If countries are negotiating, Trump is going to be more inclined to maybe extend on those countries because there's real progress going. But there's the real risk that some of this is going to be an impasse, and some of those other countries then that aren't making the effort that Trump wants them to make, he'll jack it up. That's just the way he operates.
Yep. And I agree with all of that. And what I find the most interesting thing about this whole conversation, Jim, is just a sweet spot for equities right now. I mean, that's what I see. I don't hear anything that makes me think that this market's going to get derailed. We talk about the future inflation. I think a little bit of inflation we know is coming back. We don't think it's coming back in a big way, which again, I think, that's not a negative really on stocks, right? You look at what's happening in metals, and that was the one thing I was going to go back to you with, Jim. So you think that the metals, somebody said, good to hear from an Elliotician talking about the waves of the moves. It's more of a technical thing. It's not a fear thing, because that's what's been driven into social media and everything, saying, gold is going up because of, fears against inflation and central banks, and the dollar is going to be gone. I mean, we're going to be, it's a fear-driven trade. I would say a lot of people are saying that. You're saying, from what I'm hearing from you, it's more technical. So I just want to kind of end on your thoughts on that.
Yeah. What I try to do is look at the fundamentals, Anthony, and then try to layer in the technical aspects to it. So, in terms of a dollar making an important low in the not too distant future, you mentioned an important thing. So many people in the last month are talking about, oh my God, the dollar's going to lose its reserve status. I think that's way overblown, exactly. Not going to happen. But to me, it's another indication that sentiment towards the dollar and positioning as well is very, very negative. So the dollar is setting up, I think, for a pretty decent rally. But the near-term weakness is going to be beneficial for gold. So, historically, inflation and movement in gold are hit and miss. In the next few months, as inflation does tick higher, I just think that adds fuel to the fire, so to speak. So again, near term, I think gold, the path of least resistance is to a new all-time high. And then I would become cautious because I think the dollar is going to make a low.
Boy, this has been great speaking with you, Jim. I got to tell you, it's nice to hear a nice, clear-headed approach, not either pumping fear or pumping bullishness. It's been an absolute pleasure, and I know that you have something that we're going to be giving away to our audience today. Shai, what is that going to be? We're giving away for Jim.
So if you want Jim's June Macro Tides edition, you can email him at jimwelshmacro@gmail.com. I will put that in the chat for you guys, and so just email him, and you can get a copy of his June Macro Tides edition.
Yeah,
I want to thank you both
everyone,
for
go and follow
me.
Jim on X. Go ahead, Jim.
Okay, I just wanted to say, hey, thank you for having me. I hope we get a chance to do this again. I really enjoy this kind of format where you can actually talk technicals, and the majority of the people who are listening are probably going to understand what you're talking about.
Absolutely. Yeah, Jim, this was an absolute pleasure. Great to meet you. And thank you so much for your time coming on the show. We really appreciate it. Everybody, check
Thank
out the
you.
links in chat and go and follow Jim. Have a great day, Jim.
All right. Stay well. Thank you.
Thank you.
Loved his approach.
Great. He's a great guest. I've had him on my Drop Markets before. He, I love his mix of macro and technicals, and his reports. I get his reports are amazing. So I definitely, you guys, email him and get that, because he puts the macro out there and all the technical charts. So good stuff.
We will put that in chat and make sure everyone's able to go and know exactly what that what they're getting with that. So I appreciate that a lot. My final thoughts on him is like, it's funny, like I see Merritt in there. Company's been incrementally increasing prices since 1982. He's not wrong. He's 100% right. I mean, that's the one thing about when you look at prices of things, they never come down.
2% inflation means 2% each year. It doesn't mean, just 2% inflation. It's compounds.
It's funny that it's the most hated bull market that I've seen. I was bearish, obviously, following that big rally up. Merritt was actually somebody who I think was bullish before, pretty much probably first on this network. It didn't take me long to realize that, I might be stubborn in some ways, but I'm not stubborn when it comes to fighting tapes. And when you look at this tape, the tape tells you all you need to know. The information's right there in front of you. It's whether we either want to accept it or we don't. And again, I think there's going to be ebbs and flows in this. I don't think it's just, a clear path. We're just going to straight highs, buy every dip. But when I look at what's happening right now, again, I'm not a macro trader, but I like looking at a macro theme. What's happening in the market environment? I talk about it with you. I talk about it with Pharm. I try to go sit back and go, what's really happening? Why is gold going up? Is the dollar going to zero? And what's happening? Well, you hear a guy from a guy like Jim go, look, it's this cycle right now. The Elliotition I thought was pretty cool. And somebody talked about that, just the wave of it, and saying that the dollar's not going to zero, but gold's in favor right now. Silver's in favor right now.
Right.
Platinum's in favor, and there are some fundamentals behind it. It doesn't mean equities are going to zero, which a lot of people might paint that picture.
Right.
Right. And with a weak dollar, that's bullish equities. Just is. So gold can go up with stocks.
Absolutely. Gold can go up with stocks. Gold can actually go up with the dollar too. As long as it's, gold can, even if we see a bounce in the dollar per se, gold can still follow until you start getting into, those kind of well over 100.
I think the interesting market right now, the two interesting markets to watch are tomorrow, ZB, the bond market following CPI. I think that's going to be important. And also crude oil. Man, if crude oil continues to go higher, I don't think right now, for us in the charts, it's like, oh, it's breaking out. It's got some action. I don't think that crude oil and these prices, Shy, from listening to you enough, changes much in terms of overall inflation. But if crude were to start going up quickly and get above $70+, then you wonder what that means.
Right. And right now, it's just been a grind higher, right? And so there's nothing really, geopolitically anymore that's kind of affecting this market. That's kind of played out already and kind of already baked in the cake, so to speak. But it's, it's grinding higher. And I think a lot of that has to do with, people getting squeezed out of this market because the sentiment was so terrible and everybody was short the market.
Yeah. All right. Well, that does it for us this morning, Shy. Thank you so much.
Thank you.
All right. Let's bring in the big guy, the big calf guy, the guy with the big calves. There he is. Looking fresh this morning again. I tell you what, man, for a dad being home with all the kids, wife on vacation, you're coming in sharp. Either you're just not sleeping and going straight through it, or, you're super dad. I'm not sure what it is yet.
It's definitely not the second. So, but I'm trying to fake it for a couple more days, Dally. I got to make it till Monday.
So, all right. Look at this market environment, Pharm. Again, we've covered a lot of, kind of like macro theme and what's going on in the background here. Let's look at what's happening again today. You've got crude oil starting to make a little bit of a higher high. Again, silver, although it's flat right now, silver and platinum continue to be bid. Gold is bid. Bonds are up a little bit. Tomorrow's CPI. What are your thoughts of this overall tape coming into today's trade?
Yeah, I mean, overall participation, I see as being very light, and I think that makes sense. I mean, what reason does any meaningful size have to make any major changes here without, too much in the way of policy changes? And so, because of that, you get into some pretty low volatility grind and supportive flows. Indices are designed to go up and to the right, and so you get this choppy grind. You get some profit taking at key spots, and it's easy to get bared up on a 30-minute candle that's, gosh, nowadays 20 handles is like limit down. But the dip just gets bought and it grinds back up. And I see this more and more, like when you watch the action intraday, and I mentioned this last week, I think it was, with the Mether Q levels, like when price responds like almost only to those key sort of strikes, it's kind of a clue that participation is just a little bit low. It feels relatively inorganic to me. So I just see it as being very light. And so you got to be able to pivot quickly because, if somebody comes in and they do have to move some size, then, you can get an outsized move in one direction or the other. And a lot of times that might be a fade, in particular if that move, in this environment is to the sell side. So, I mean, like you have today, we have CPI tomorrow. So maybe we get like some hedging flows that come in today, right? And we see some weakness. Well, once that's done and over with, we're probably going to float back up. So that's the kind of thing that I would love to see that today if we get some early weakness. And I'll get into that a little bit later, what I'm going to demand from the market today. They will give it to me or I won't trade probably. But that's the kind of thing I'm looking for in these tapes is just opportunistic moves, very, very patient, avoid the chop, avoid the grind, wait for one side of the move to play out and then take the other direction.
Yep. All right, let's go to the charts. I think that was very well said, and I was getting my charts ready. And the first thing I want to look at today is just crude oil. Crude oil, we've broken out above these recent highs here. You can see it. It's pretty clear. You look at, we're at the highest prices we've been since April. It's always so funny, Pharm. It's funny. I find myself doing this too. It's like crude's breaking out. Look at, here we go. It's the highest we've been since April. Okay. Yeah, I mean, let's not get crazy here, right? But nonetheless, when I look at this tape now, you had a decent move lower. You had a retest of the low, and Shai and I were talking about this a lot. I made a whole 20 cents in crude back here on this swing trade. I covered it going into a weekend. It was just really brilliant, and it was like I kind of laugh at some of these things you do, right? And it was just. This area kept getting news, and she kept saying this 55 handle was big. Market has held. You had a nice consolidation period. Now the moving averages are all moving higher. You have a tape that is just, it's just screaming, continue to rally right now. Nothing's ever smooth and easy. But when I look at this, when I see Bollinger Bands expanding out, consolidation off of a retest of a low, very bullish. Hard to see crude oil not to want to start looking for these recent highs when we go back and go back to the high of, go back all the way so you can see the whole year. There we go. Of these recent highs back in the beginning of April, which is roughly just above $71. I don't see a reason for them not to start going after that. And so crude, even though in the short term you look at an RSI, I don't look at the RSI and saying, if it gets above the overbought area of 70 as a bearish thing. I actually think it's a bullish thing, meaning that when a market starts to go from a consolidation to trending upward, but moving averages going up, I look at the RSI, you want it to see it say overbought because I don't think that being overbought on the first time when it gets up in there is bearish. I think it's actually bullish, and I think it's a reason for the market to stay on the bid. Because markets are getting slightly overbought in the short term on the RSI for a reason, and they typically will stay there for a period of time. And crude oil is one of those markets where I look at it and go, once it starts trending, I think it's just something to look for continued upside on it. I've been looking for opportunities to get in on the swing long. I mean, it's just one of those markets where maybe I have to go to the options to get it because I do think it's going to see the 71 price handle. I'm not in a super big hurry. I've been waiting. I got something for Merritt to show him today with my indicator on his stuff, but I've been waiting for any sort of pullback to my blue level or even my yellow level to get in, and I just can't get it. And it's just hard for me to manage risk just being along the outright futures when I'm buying at all my resistance levels that are turning into support. But that's kind of what happens on breakouts. But I will be continuing to eye crude oil for a possible swing long. Silver, let's go back to the daily here. Silver, I just don't see anything but 39 to 40. When you look at it, it's the same scenario kind of as oil. You had a sharp move lower, not a retest of the low, but you had a consolidation with moving averages, goes up higher. Bollinger Bands are up in that crease of the Bollinger Band where they're going higher, and RSI is overbought, and as it should be. I mean, the only time an RSI turns bearish to me is when it goes from overbought, and then all of a sudden my Bollinger Bands come inward, and then it comes out of being overbought. Then I look at it and go, it's probably bearish. But as it is a overbought, I think that's actually bullish. And so I think silver can continue to go higher, especially when you get in commodities, everybody. It is such a different world than equity indexes because they can just run so much more fierce in one direction. Well, I mean, the NASDAQ kind of does that too, but it's a whole nother story. But look at platinum. I mean, it's the same story. I mean, platinum was overbought on RSI way back here, and it's rallied another 250 points, 25%. So be careful of looking at overbought tools when you're trading commodities. They're better when they come out of being overbought or oversold. And so look, here's just platinum, just with no signs of it stopping. And, it is what it is right now. Not much I could do up in that market. I would not fade it. Let's get to equities. We're going to start off with the Russell today. The Russell, because the Russell to me is really important for this market right now. You've got Russell reconstitution this month. I've talked about this a lot. If you're not familiar with Russell reconstitution, every year annually, the Russell rebalances. And I did a whole podcast on this with CME, CBOE, and FTSE. It'll be out this week and next week. I did 2 parts to it to explain what happens within the FTSE Russell 2000 and 1000 rebalancing. And so it's typically a time where you're going to see a bit of volume resurgence, not necessarily a time of volatility, but new companies are coming into the Russell 1000 and 2000. So you have that going for it this month, which all confirmed at the end of the month. But in the meantime, the Russell is the one that's been lagging the entire market, and now you have it stabilizing. I have an anchored VWAP from the recent swing high. It's above 2 standard deviations from that anchored VWAP from that high. It's just bullish. I mean, it's coming to the party. Again, another thing, people look at it and go, well, it's in the overbought in the RSI. Good. It should stay overbought. It's being overbought for a reason. I look at this and go, if the Russell stays bid, yeah, you might see some rotation out of NASDAQ just because they'll sell NASDAQ and buy Russell. We see that a lot. But overall, I think it's bid for the entire equity indexes. S&P, I look at it and it's just like, again, there's not a lot for a swing trader like myself to do. It's just like if you're trading the moving averages, great. Because it just continues to grind higher on the 8, 21, and 34. For day traders, probably not loving this action, the fact that it's really slow, grindy higher. But the tape tells us that on the daily. Nothing tells me that this market's looking for a top at all. And so I think the previous peak in the Bollinger Band is going to be my target of 62.50. I'm not long the ES, but I look at it and go, any sort of pullback. I've talked about a pullback down to the mid 5800s. I'd love to see it. Maybe CPI brings it, who knows? But I think we're headed to 62.50 in S&P, which when you look at the futures, that would take us above these recent highs here. And new all-time highs, I think, are likely in our near future. And you look at NASDAQ, same thing. Just not a lot to speak about on the equity indexes. You can't, I got to be forced to trade them from my time frame, and there's just not a lot here. They're just grindy upward markets. And, intraday traders, again, I think you could trade it 2 ways. Just work your stops. Know there's going to be some ebb and flows, but know that the overall tape is still supporting higher prices. And that's the side I would lean on more than the short side. That's what I've got for my morning prep. Let's go to you, Pharm.
Yeah, quick question on the Russell reconstitution. Is that where they take the companies out that have gone to zero and then they put in new companies that are going to zero? Just kidding.
I'll have to confirm that, but I think
basically what it is, right?
Yeah, there's a threshold, just so everybody knows, and I go over that specifically on what that is in terms of market cap. I think it's 4.6 billion. I can't remember exactly what it is, but they're between the 1,000 and the 2,000. But yeah, no, Pharm loves busting the chops about the Russells going to zero. But we need it. Hey, the Bulls need it right now, Pharm.
Yeah.
I'm surprised
Yeah.
you're not talking about this more.
Yeah, no, I do agree. And when you see the Russell move and finally start to catch up, you definitely want to see it move organically and not see the big squeezy moves, right? Because sometimes when it just catches a squeeze, particularly while the NASDAQ gets weak, a lot of times that's just leverage unwinding. If there's a fund that's got, long queues, short trash goes, on their book, and they just sort of need to degross a bit. It's a lot of times just from that. So you don't really want to see that. The action looks pretty good to me on the Russell so far, which means that I probably just jinxed it. I'm watching the 2158 to 2162. It's basically where the overnight high is right now. Big spot for me. And I like to see if it can get through there after today. And Russell will respond well to, Goldilocks type data. And the jobs data was pretty much that. We'll see, what CPI brings. I don't have any reason to suspect that CPI will be like crazy hot or anything like that. So I think it should be okay. Again, like you can't have rates too high because, inflation's too hot, and you can't have rates too low because we're worried about the economy. The Russell likes it just right. And as of now, we've got an opportunity for that narrative here. So, but getting into the action, I agree. It's just this grind. I don't love the setups into today, even for like a day trade. So I do have something, that I would like to see. I'm not calling for it, but, I'd like to see it because this action is very choppy and very grindy. Yesterday, had some pretty good setups. And today I just don't like quite as much. I would like to see, after that wild overnight move, I don't know if like a text leaked from the Signals chat group, with the Trump admin or what, but China was going to buy a few soybean bushels or something. And then that just got smoked. I didn't even like see if there was a narrative for that or anything. But, the bottom line, and I've got NQ up again because it's more clean on NQ. We've still failed to break away from these 874s to 888s is what I've marked. And so clearly we did that overnight. That was rejected. Cash hours was stuck right there. So what I would like to see, and, Ken Griffin, of course, is an avid follower, watches the show every morning. So I'm hoping he's going to make this happen. What I would like to see is some hedging flows come in and sell this thing all the way down to these like 630s to 650s. And everybody's going, what the hell's going on? Maybe even sweep this out. And I would be looking for a long. So, for the Pharm's too bearish crew, I want it to go down so I can buy it, right? So I would like to see that. That's a trade I'm interested in for today. But this is generally just balance, this range here. Call it 630 to 890. We've got a couple of excursions, but you can see how clean that distribution. We talked about this yesterday. You can just see how beautiful that shape is there. So you can see some clean rotational trading across a nice clean distribution like that. So I would like to see that. And I would expect that it most likely comes in, and this would be, again, if we get some hard hedging flows that comes in, maybe even runs this and then pops back over it. So I would be patient if we get some hedging flows, and then I would be looking for perhaps a reclaim long, and I'd take it back to the middle and then the other side. And because I'm a giant chicken, I'd probably be out before CPI. But that's like kind of one thing that I would like to see. And so, Mr. Griffin, if you're listening, let's go ahead and make that happen, please. Aside from that, back on the ES, let's zoom in just a little bit. We're still well above, for now, the 59.87 half. That was the 3-week balance range. So we've held that. We haven't even properly tested it. We had Friday's low just below there. I think it was 84 half. And I mentioned yesterday that I would love to come in and sweep out Friday's low. We had these overnight single prints. And so I would still be okay with that. Kind kind of a trade. But, generally it all is very choppy, grindy. NQ looks a little bit more clean to me on a bigger picture basis. But ES is okay as well. And right now it's basically, stuck between, well, a couple of key SPX strikes, 6,000 and 6020. So that to me is, another example of why I think participation is just a little bit low. It's responding to those strikes. And I posted a meme, the Scooby-Doo meme on X last night. What's behind this, relentless offer at SPX 6020, and then the unmask comes and it's like, ha, SPX 6030. So, well, what happened, right? So, yeah, that's where we're at now. And I don't see any reason until there's some kind of big shift in narrative for this to change. I mean, this trend is not changing until ultimately we take out, prior week's low. We start establishing value lower and lower on like a weekly basis. And so until then, excursions to the downside are very likely to get bought. And that's why, again, I would love to see some hedging flows come in. That is not organic selling to me. That's just longs, right? That are bullish. And so they're adding hedges so they can stay long. That's not a bad thing. So I would love to see that. And I'm insisting on seeing that today. And I've got a couple more trades, but let's get a couple of your thoughts because we got a few minutes here.
No, I love where you're going with it. What I'd like to see you talk about more is when the indexes are working all together right now. How you're choosing which index to trade intraday, because we know how much you love the Russell, and sometimes you are trading it. And when you start to get potential divergence, and you've got like the Russell leading to the upside, is this leading into you potentially either looking at Russell technicals to see for a move higher across the board in the indexes, or are you going to trade the Russell, or is there anything within that divergence that's helping you choose which or which not index to trade?
Yeah, I'm glad that you brought that up. Because I mentioned something yesterday. When the Russell started to show some strength, at the same time yesterday, NQ showed some relative weakness overnight first, right? And so to me, I want to lean towards the relative strength if I'm looking for a long, relative weakness if I'm looking for a short. But just since I'm on dad duty, I hadn't, fully charted the Russell. I wasn't prepared to trade it. So, I was thinking like, okay, well, I'll probably trade ES then because, it's a little bit stronger. Last thing you want to do is trade NQ, the relative weak thing. But what comes first for me is the setup. And yesterday, the setup was we took out Friday's low on NQ, dipping into those overnight singles that I referenced again, and then reclaimed these 730s, which have been extremely well bid, and then sort of rocket ship. So first and foremost to me is what is the setup? Because I'm not just randomly slapping longs or shorts on random levels. I'm looking for very specific actionable setups that have a high probability of working for something, and then some probability of working for a large move. And so to me, it's all about those setups. We had one on NQ today, which was the 730s, sat just below yesterday's cash hours low. And of course, I was sleeping when the overnight low came in for those 730s. So first and foremost to me is the setups, but I am always looking to be long the strongest index and short the weakest index for sure.
Yeah, no, I appreciate you talking about that. I think that's important. We talk about that with Tanya, who's coming up next, because she trades between ES and NQ. And yesterday we had this conversation, shorting the weakest, longing the strongest, and we've had that conversation many times. But it's always important to note when you start to expand outside of one index, how you're choosing which index to trade. All right, let's take a look inside the tape today, Pharm. We got a couple minutes left and what you're looking for.
Yeah, so I mentioned the Qs. If we can see some hedging flows that can take it all the way to the 630, 650 range, I'm looking for that area for a bid to come in, or even better, if they sweep that out and then reclaim it. Now, I'll be watching ES as well, because again, I'm looking for a technical setup. I still think coming into Friday's low, which is a back test of that 3-week balance range, would be fantastic. And same type of thing, if we can sweep that out and reclaim, I'm going to look for a long on that as well. And really even, I mean, we could come all the way down to 72 to 75. I know this like all sounds very bearish, like, oh, where's this going to come from? But like, that's what I want. Like, and I'm not screwing around in here. This is just not very fun to me. And there is a sequence in play right now. If we get hedging flows, there is a sequence in play for all of this to happen. So it's not like a zero probability for us to get out of line. And again, this is just, I have what I want. And for me personally, if I don't get what I want, I'll just sit here on my hands. And then if something happens intraday and I get a fresh setup that's in front of me, then that's something different, right? We took a short on Thursday at like literal high of day. And I had zero plans to be shorting this market, but it was a situation where it presented itself. I was extremely confident that I could get 6. And there was a possibility of getting 30, 40, 50, and it ended up with 75. So I'll always take something reactive. But as of now, I want to see lower. I want to see sellers get out of line. And then once they're done with what is likely to be hedging flows, if that happens, then I'll take it. Because, I mean, otherwise, you're just kind of trapped in here between this, 6004 to 8 and, 24 to 28. You can play the edges. And then like the same thing on NQ, I would say like 824 to 874-ish. You can take rotations in that range, and that's probably okay, but just doesn't really particularly interest me.
Yeah. Day before CPI, again, the market right now is showing us sideways to grindy higher. Going to need something to take us out of this range. Don't be overstaying your welcome in anything today, I think. And of course, we'll watch the headlines to see if anything comes out as we are wrapping up some chats between U.S. and China in London. So we'll see if something comes from that in regarding to tariffs. But Pharm, thank you again so much. Everybody, hit the like button for my boy Pharm. We always have a great time with this. And of course, hit the like button just for the NinjaTrader Live Network. Crossed 133,000 subscribers, so hit that subscribe button as well. 21,000 and counting since we started NinjaTrader Live, and this is week 12. So we appreciate all of you, and you're my boy, Pharm. Appreciate you being here with me every morning, doing market prep, talking macro, having fun, talking charts. Have a great trading day, my brother.
You too, Deli. We'll see you, buddy.
All right. We've got Tanya in here. Tanya, good morning. How are you?
Good morning. Good morning. It's a new morning, so I'm good. How are you?
Good. It's the day before CPI. We know that you like trading CPI tomorrow. Coming into this morning, we had a lot of talk about how crude oil, I brought this up to you yesterday, was still the story, still kind of breaking out. Maybe we'll take a look on your chart today if you choose to. Silver continues to be a story. So those markets are a little bit busier than us. Not a ton going on in equity indexes. Although our chat, Tanya, we might as well get to this right away. 52% bullish again. Above 50% almost every day for the last several sessions, as far as I can remember. 20% bearish. Again, you're looking at the lowest number of bearish almost that, we've seen. It's anywhere between 15 and 20% bearish every day. Neutral's right around 30% this morning, which has been a theme. This is almost every day, and every day you and I look at this to get a test of sentiment. It's the same. Nothing's changed.
Yeah, and it makes sense because not really much has changed in the market. We're just still having that slow grind up higher. Yesterday there was some small opportunity to get long in the morning session at the beginning of the morning session, and I ended up missing that, and then tried shorts there, got stopped at break even during my morning session. And such a tiny range on NASDAQ yesterday, like 150 points. So that was quite difficult. I was trying to short the afternoon session there and then got 20-point stops, tight stops, but did not end up working out for me until it ended up dropping at like 3:50 p.m., which is frustrating, honestly. But it's kind of remarkable when we have that tiny 140-point range during the morning session. You can see on the hourly we had just this is the afternoon, just those tiny body candles, then that drop at 350. And then you have Asia session taking out like the entire, like larger than the New York AM session range or the entire New York range during the day. Took out that Thursday high for NASDAQ, previous week high. And then London session, and then we had a reversal at midnight actually, and then London session dropped down a bit into some trendline liquidity. Yeah, I don't really love the look of the indices. The day before CPI now, let me see. Is there any red folder news today? No. We have
No.
President Trump speaking at 4 p.m. today. Okay, that's interesting. So I mean, there's not really much in the tape that's changed for me to really want to look to press short. I wanted just like minimal sell side yesterday at 10 a.m. open. That ended up getting hit now during like that pullback during midnight to London session. I don't really love the look of the indices just because it's just those, we've been talking about this. Those average ranges are so tiny now that it makes sense. Monday, no news, 150 point candle. So yeah, I'd err on the side of caution. Yeah, we're still grinding up higher. It seems like we could get back down into here, and then I'd probably look for longs. But other than that, I probably wouldn't touch it much because we hit that previous weekly high. Had a small drop off. I think that we could potentially come back down into this range of like 21,700s on NASDAQ if it's going to go for more sell side here. And ES as well, we have this 4-hour gap there. Yeah, but other than that, like, we're having that slow grind higher. So it's hard to get long when you're in a premium. If I was like, where was I? Like near the highs of this 4-hour range. Here at 2 p.m. I said, no, I didn't want to get long at the high of this 4-hour candle. Then we had the next hour be a inside candle, the next 4 hours, which is basically like Asia open, 5 p.m. open. And then, we're just, so like the point is I'm trying to make is that it's better to get long just at the extreme of the range or after we take out some sell side rather than, trying to be really precise here because there's just no room for error in tiny ranges. And then it's like low volatility. And then you'll have like a couple of candles that'll just wipe people out just because of the lower volume. So yeah, I think that would be good if we retrace back into this area, like 59.85 for ES or 21,720s for NASDAQ before we go for that next leg up higher. Yeah, I mean, honestly, for the indices, it's the day before CPI, and we have red folder news Wednesday, Thursday, Friday. I'd rather just let it settle a bit there. Like you said, crude oil is a bit better, so I think that we should take a look at that next. But yeah, I mean, for indices, just that small ranges, small grind higher, it's just a pain trade a bit. So I'm not going to be, I think if we take out that Friday low, maybe I'd look for longs because that would still be valid for longs. Yeah. So unless there's like some kind of injection of volatility, I wouldn't be trying to take too many trades in this. What are your thoughts on that for indices?
Yeah, I think going back to my days on the floor, we used to say, only lose what you know you can make back. And that tells you a lot about the environment. That's why I've always adjusted my risk based upon the volatility, right? I have a dollar amount that I'm willing to put out there on a risk per day or per week or per month. And that is determined by how busy a market is or how conducive that market environment is for my strategy. I don't come in and risk my full amount every day in a market where I'm not getting a lot of opportunities. And I say this all the time with Kane. I write posts about this every weekend. A theme is stay in the game, and so as an independent trader, it's important to understand you have to be able to keep yourself in the game for the times where the market environments are not conducive to your strategy, and you have to be better than everybody else because it's your money. Every loss hurts. You know, you feel every loss, you feel every win. And so therefore, I don't want to put myself in positions to where I have a weak hand for when the market environment gets better. And what I mean by that is I don't want to put myself out of business or hurt myself mentally or capital wise when a market tape is too tight. And some people say, well, I'm willing to risk $500 or $1,000 a day, and maybe they're a small account and they come in on a day where there's not a lot going on, and they continue to churn and go to that max loss just because they said that's what I'm willing to risk per day. Well, you've got to be smarter than that. You've got to understand if you're not getting the responses you want, if you're not getting the ranges you want, if you're not getting the volatility you want, or you look at the tape, we all know when we look at the tape if it's conducive for us or not. And we don't know exactly until the market opens, maybe how the reactions are, but take things down. You know, I'm always reducing and increasing risk based upon what is happening within the market environment. And so I think it's just important to note that, you know, we come in here on NinjaTrader Live, everybody, and everybody here is trading their own money. And so that's a big difference than going in and trading, you know, whether it's a sim or you're trying to do an eval and you're trying to get somewhere with that and it's not your dollar. Every one of these traders feels that loss. And so it's important to know that we're not going to force things. And so that's why we prepare every day to say, look for something that forces me into a market. I'm not going to force my way into it. So I appreciate it, Tanya, when you say there's just not a lot for me to do, because everybody comes in and they want to find answers for every single trading day. There aren't answers for every single trading day, and that's okay. Embrace that. So I just wanted to say that because I feel like it's when markets get slow, people start getting antsy. Don't be antsy.
Yeah.
Calm down. You'll be okay. It'll get busy
Yeah.
again.
Yeah, there definitely is the pressure, and then there's like the added pressure to perform for sure. So we appreciate that. Sometimes it's not, yeah, it's not conducive. So yeah, that being said, we can take a look at crude oil then. So I do like that the long idea that you had here, because on the weekly, yeah, we're breaking out to the upside. We took a lot of sell side here in the 55s and all these previous weeks. Could even make this a bit larger here, yeah. And I would think that we just took all this out. Yeah, it's totally possible that we'd go for more upside. I mean, it's even possible to take out all this, yeah, this whole swing high, especially that crude oil is more of a range-bound asset, that we could come back even to the 70 level in the coming weeks. And honestly, it doesn't look like a
Yeah.
bad swing trade, especially on the daily. I had this marked out on my other charts, but yeah, especially this day. What was this day? It was Friday. We ended up closing all above all these equal highs on the daily, and we had a nice closure above that, and it's looking pretty good. Honestly, it looks pretty good. So I might even look for myself for a swing trade there. You have a daily FEG here, but I think on the 4 hour looks pretty good too. Forgot what I was looking at. Yeah. Honestly, we closed really strong on the 4 hour here. I think that, yeah, one can probably be long versus 62.8 or even 63 area. And even, yeah, and hold up for more upside from that daily levels that we were just looking at, those daily levels. I would think, because yeah, we even closed above here. We could reach all the way back up to here if in the coming weeks. So obviously that would probably take weeks to pan out. But that's the beauty of swing trading, is that you'll have like more healthier stops. I think I would honestly, yeah, being long versus 62.78 is totally viable. And could reach to my first target would probably be like the 69 here. We have this massive gap down from here that we never retested, we never repriced to 69.31, and then, you know, 71.21 would be the final target. And that's a nice RR there. Even 2-to-1 would not even need to get all the way up here. So it looks like a really good potential swing trade, especially since the indices are quiet. It seems like, I think like your morning note said that like the commodities are getting more interest these days. So might as well adjust a bit. And yeah, I mean, yeah, have your Boomer Bollinger Bands shown you your swing setup is ready?
Yeah, they are. I mean, 64 and a quarter to maybe 64, like 60-ish. It's a 2 standard deviation off of, I'm using the VWAP to help me get my way into a trade like this. Because I agree, like my stop has got to be below the mid 63s. So that's the problem with it right now. You got, if I start buying them in here, I've got over $2 of risk. I think they can go to 69. So it's not actually that bad of a risk reward, but I'm just looking for some minor pullbacks. And people forget too, there's micros, there's MCL. And sometimes, I mean, I don't really trade them often, but in this situation, if I'm going to scale over $1, you could still get as big as you want, but I know because it's 1/10 of one crude oil. I'm just looking for some minor pullback in crude because we've had so many fake breakouts in crude that it's hard for me to chase this higher because it's like all of a sudden I'm long from 65.48 and the thing's trading 64.80 and I'm going great. I'm out of bullets. And so I've just been down this road with crude before. I don't chase it, but it does look good on the charts. It looks better than everything else I have.
Yeah, that's what I sort of noted here is that like when there it was trying to break out here and it couldn't close above any highs. It just kept wicking. It did retrace into here on the 4-hour, an extra time there. Let me see, like from here to here. It did retrace when it failed to wick higher here. It did retrace another time into this 4-hour gap area. So, you know, it's not out of the question that it could even come back to 64. Yeah, 64 here with the to retest its breakout again. And especially there's not really many gaps. So it did a retest here pretty nicely. We'll see if how this 4-hour goes. If it wicks today at 10 a.m., I mean, at the end of this 4-hour, yeah, then it could totally come back into this range and start retracing. Honestly, though, even having like a $2 risk to make 4 is good. So, but yeah, and there are ways to manage the risk there with micros or even, I mean, hopefully we'll get some futures options contracts on NinjaTrader because that's just the easiest way to go
It's
about
coming.
Okay, great.
It's coming, Tanya. At the end of we're going to be looking at hopefully within the next, I mean, I don't want to say when, but it's coming. That does it for us this morning. Tanya, I'm so glad we got you to look at crude oil. Appreciate your insight every single morning. Tanya's on with us Monday through Thursday from 9 to 9:15. And of course, she streams all day on Mondays with us. Tanya, have a great day. I look forward to hearing from you tomorrow on your favorite trading day of CPI. So have a great day today, and we'll see you tomorrow.
Thank you. Appreciate it.
All right, everybody. It's Tuesdays. It's the guy with the best mustache on the network by far. He also gets the longest hold time of all the traders. It's an interesting stat. People come in and they watch Merritt and they stay because he's good. It's Tuesdays, trading the open with Merritt Black. Good morning.
Good morning.
So it's an interesting stat we saw for your stream, Merritt. People stay tuned in longer than any of the other streams. It's pretty good.
That's that warms my heart.
Yeah, it should. Yeah, it's people love watching you trade, and we love having you here and going over everything that you do each and every week. And I've got a little surprise for you this week. So I asked for your workspace a while ago. And I've been working on some stuff. Can I get my charts up today to be able to show something to Merritt? Are you in a position, by the way, right now?
No, sir.
Okay, good. All right, so we got Merritt's charts, but we're going to try. We need to get Delhi's charts if possible. No problem. So they're working on it, but I want to show you something. So I'm going to plug it while we're getting there. So I take everybody's, I've been looking at Sarah's strat, everybody, and, I've got so much time on my hands. It's not really. But at night and in the mornings, I've been putting together some of the indicators and stuff that I look at. And, something that what I like about your strategy that coincides with something that I built years ago. It's a lot of mean reversion, and it's funny. We hear you talk, Merritt. You talk about. I remember when somebody put in the chat one time, they're like, "Hey, Merritt, don't go picking bottoms," and you go, and it was great. You go, "Hey, buddy, I make a living picking bottoms." It was,
Yep.
and I'm thinking to myself, yeah. I mean, that's so. Here's something that I overlaid onto your charts, again, I'm going over this because I want everybody to also think outside the box. We've got guys like Merritt in here. We've got the lab. We've got order flow labs. We've got Tanya. Everyone's got their styles, and whatever resonates with you, you might have something else that helps you execute that strategy, and that's cool. And that's the beauty of trading, right? And so I like taking ideas that other people have to see if it helps my idea of the way I look at the market get better. And what Merritt stuff has done has helped me with that. And I'm going to go over something with you here. So this is the NASDAQ on the 1500 volume, which is also something that I added because of what Merritt had said. And then I have Merritt, this is your workspace. So Merritt, just to be clear, this is an anchored VWAP from the open of the market with 2 standard deviations, correct?
I wouldn't call it anchored, but it's more of like a repeating daily, VWAP.
Got it. And so what you're looking at, as we watch you each and every week, he's looking at cumulative delta down below, and he'll look to see if there's buying into areas or selling into areas, and then he'll look for using these bands as potential entries, and I'll let Merritt get into that when he's trading his stuff today, and I'm just quickly going over it, and then he looks for these moves, and a lot of times they're mean reversion. Am I right on that in general context, Merritt?
Absolutely.
A lot of times they're either mean reversion or going with trend.
And the real magic is that a lot of
so-
times it's mean reversion on this time frame to go with the trend somewhere else. That's where the magic
Exactly.
happens.
That's exactly right. Okay, so, and that's what I started to look at this, and I said, okay, so what I look for is Bollinger Bands, and I look at Bollinger Bands in a way of anytime the Bollinger Bands are opening up like a mouth, and we're seeing range expansion. So anyone could look at a Bollinger Band. I don't have it up on this right now, but imagine a Bollinger Band, and it's opening up like a mouth, and the market's going in one direction. Anytime the Bollinger Bands start to come back in, and they come back inward, that means that volatility is decreasing, and you're likely to have a mean reversion move from that move. And so what these levels that I have here show us, and the red to the yellow is my mean reversion trade. And this is what I traded literally. I developed this in the late 90s. And this is something that I looked at. And what it is anytime the Bollinger Bands start to come back inward, I look for it to go from this red line to this yellow line. And what this is this is a 70%, if you were to take a fib on a Bollinger Band, and from the top peak to the bottom peak, it's a 70% line to the 50% line. So it's basically I'm boxing out in that area, that 70% to 50% area. And that's a mean reversion. What I've been looking for lately on Merritt's 1500 volume chart in the NASDAQ is when I get a mean reversion signal, and the red line is coinciding with one of the standard deviation lines, and my target is the yellow. And so what happens is it stops drawing the lines once the yellow is hit. So the target is just a quick mean reversion move. And so what I was looking here, and I've been looking at this every single day. I've traded a little bit. I've made a couple bucks with it so far, actually. I'm not being super active with it, but you look at it, and I look for these mean reversions back to basically the middle. And so that's just what happened overnight. You had this 1500 bar with this coming back into here, and then then you look into today, where this morning, right now, in the NASDAQ, and this brings me to where we are right now, what happens is that I look to see, so now the blue is in for the yellow, meaning that this is, the market was going lower, then I have my 70% line, and we're looking to test back within the 50% line. So my target this morning is saying that the NASDAQ will trade 21,882 before it gets outside of what I've been looking at, the 2 standard deviation line. So I'm buying in this area, and I'm looking for the target to come in within here. And again, what I'm showing here is that I could take something that I learn and look at what Merritt has taught me, and it helps me become a better executor of what it is that I'm doing. And so it keeps me, what your strategy has done is help me keep me focused on executing better within these channels and watching what's happening with the cumulative delta. Because so like over here, I've been watching the reactions. I'm like, okay, you saw this selling into this level here. And once the buyer started to come back in and reestablished my level, I looked at that and go, that's something that I was looking for. So again,
That
I'm going to show
second
this and
retest
reveal
is a
this
really
more and
nice
more
one
over
there
time.
too. I'm not sure if that's something you would be interested in once we kind of with the VWAP and then pulled back
Yes.
to your blue line, which is the lower standard deviation. That's a really good order flow signal.
Exactly. And again, I show this not because I'm trying to show what my indicator is doing with Merritt stuff. I'm trying to showcase that by learning of what Merritt's been showing me each and every week, and obviously I've known him for years, but watching him trade live each and every week, it's helping me refine a strategy I had built and used for over 20-something years, and it's made me better. And that's
That's
the
awesome.
goal each and every week. And I wanted to showcase that because it helps me look at things in a way to where it opened my eyes to getting better. And I think for everybody out there, I think the one thing, Merritt, we can go back to Merritt's charts, is that everybody, I think a lot of people get so focused in on a single strategy, and it may resonate with them, it may not, or they look at what you're doing and then they just solely go to that, and then maybe they have some ideas that they like that are working well for them. You can layer those. You don't want redundancies. You don't need all of that. But if you can find something, and like I keep it real clean for what I'm looking at with your stuff. And now this is like my primary short-term execution chart. Merritt's layout with my indicator on it. And it's just helped me see the market better. So I wanted to thank you for that. And hopefully everybody, I gave them a sense of utilizing what someone's teaching you and what's something that you've had and just to make yourself better.
Even every student who comes through Apteros doors, we say the goal here is not to make you a cookie cutter version of Merritt. That's not the goal. That's not what we're trying to do with anybody. We'll teach you all the frameworks. We'll show you the tools, the indicators, different things that we look at. But the ultimate goal is for you to take something you've been working on for 20 years, something that you love, a market you love, a time frame you love, a style, another indicator, whatever that is, you got to make it your own. Because if you can't trust it, you can't execute it well, right? You have to learn to kind of trust what you're looking at.
That's why we do preparation. Preparation is what leads to patience and discipline. Because if you truly believe in it, that's when you naturally create patience and discipline because you believe in what you're doing. So perfectly well said. A couple questions in the chat. People are asking, do you still do Apteros? He absolutely does Apteros. It's flourishing. It's one of the best in the business. We will put that link in there. Follow my boy Merritt on Twitter. I took up enough of his time today. I want to leave it to him. Talk about trading.
I love it, man. I'm glad you did that.
I just wanted to highlight that. Thank you. And very well, my brother. I will be watching and chatting and learning like I do each and every week. Everybody, make sure you hit the like button and subscribe to what we're doing here on NinjaTrader Live. We appreciate you all. Merritt, have a great day.
You too, brother. All right. Good morning, everybody. So this is, back from vacation for me. I was at the beach with the family for a week, and so it's always nice to settle back in. I kind of traded poorly yesterday. I'm not usually the guy that comes back from vacation or time off and says, "Oh, I can't get a feel for things." Usually I just snap back into it. So it's not the vacation, but I just felt a little off yesterday. So I'm going to be laser sharp today. Maybe take a few less questions from chat than I normally do, and really lock in here and get back into the swing. I do have gold pulled up here, if you notice. I think that, as you've heard many hosts on the show talk about, I think that equity indices are a little grindy, a little slow. And as those of you who've been following me for years know, when we're in more normal, slower conditions, we still have decent volatility in equity indices. Let's not be too spoiled. It's still decent. But slower, grindy, lower opportunity mode, that causes me to broaden my view each morning. I look at where there's opportunity, and I'm kind of against the grain, and I think that can be me oftentimes. But a lot of people talking about gold all-time highs, a few too many people talking about gold all-time highs as if it's a certainty. Crude is really interesting. I know there's a good bit of bullishness around in crude. I'm actually a bit bearish on crude here. I think we've retested into a key level on some real higher time frames. It could take days to unfold. I'm not saying it's an immediate thing. But crude needs to show me something. It needs to be able to get below some levels as we fire off here at the opening bell to kind of confirm, right? I don't just see a level and trade it. I look at the reaction to levels. So I'm interested in kind of what that reaction might be from this spot in crude. And if it starts to trade higher, that is very bullish, and we have a lot of room to the upside. So at that point, I would agree with Crudele and some of the other folks. But it's not a good spot for long risk right now. And I think Crudele agrees with that. He's looking for a pullback. He's looking for a place where he can better define his risk. It was interesting on NQ coming into the open. We had this passive buyer that kept propping up this market, and now we're running stops into this region right here. Super dull place for the market to open. And yes, this is a 300 volume chart just because I'm focused on gold right now, and that's what I'm using there. Just chop around the middle. My edge does not come from the middle. My edge comes from the edges, so there's nothing for me to do. I did try a cheeky little short earlier, looking for this little breakdown because of how much selling I was seeing coming in. But a quick little scratch or stop there, whatever it was. But if you just look at where we've been trading the past few sessions, just kind of in the middle of the fat part of those distributions, it's just not a very interesting place in NASDAQ right now. Passive buyers can be very, very annoying. I agree. Curtis. I still think there are some trapped shorts, and stops are vulnerable above these highs in Q. Let's flip back to gold. So gold is retesting the lower volume node from last week. So you can see the lower edge of this volume on the 3rd. And this is not a perfect session volume profile because it's set to equity hours. So we'll sell some gold here. NASDAQ making a run at those highs. I saw someone earlier in the chat with a natural gas long. I think that's a really good NADRO-based bullish narrative in that market. So good luck on that trade. NASDAQ further chop back towards the lows. Couldn't take the highs yet again. I've been watching gold this morning, and it's had a hard time selling off. That's a non-quantitative term. That's just me with a lot of years of experience watching short-term tape. So I'm not going to be overly aggressive with this. It's not some type of A+ narrative that I need to just keep hammering and taking loss after loss on. I just like where we're retesting into these highs after a breakdown on Friday. So this is kind of what I call a breakout pullback of the main distribution from last week's trade in gold. And so my edge comes from the edges. I think I have decent risk reward here. I think there's a lot of people who are really, 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 really blindly bullish this market. And so, we could shake out some weak hands, things like that. I'm just kind of spitballing here for the cameras, but, trading my process. So as we see here, kind of a tougher time going down so far, right? Just kind of slow, it has the feeling of index grind higher, but to the downside, right? And so, I understand that my position here would be early. There's no indication of any weakness. We're at highs for the session right here where I'm shorting, right? So I'm one of the first people in this trade, right? So I don't expect a crazy tape just yet. Yeah, I agree. Stops are looming up into 880s in NASDAQ. It's a trade I can see. It's just not one I am going to participate in. I think my risk reward is better over here in gold. The probability of success is much better in NQ. and the risk reward is much better in gold. I tend to trade for risk reward. Okay, there we go. 880s in Q. A short-term skill. I always talk about it, and I say that word because it's a category of skills that we assess at Apteros, is the ability to identify areas vulnerable to stop runs. It's a great skill to acquire. So I'm going to scratch out of the gold position here. Coming off of this +2 standard deviation, you know, I was looking for more of a decent amount of upside momentum, and it's just really struggling to do so off of there. So we'll stand aside in that. Take a look at NASDAQ. There's that stop run through these highs. Just had to go stop out longs from here and here before it could go take the highs. Delta neutral holding nicely though for those down moves, so the sellers were not very scary as it happened. You can see all my time frames right here on the chart. So this is a 300 volume chart I'm using for gold. For NQ, I've been using 1500 volume. I've started to lower it lately because the volume has been so much lower. So I think that 800 to 1000 volume bar is a nice one for me right now in NQ. Everybody go ahead and smash that like button for us. Show a little bit of love and appreciation for the stream and what the NinjaTrader Live network is doing here. Appreciate it. It's not hard. Little move of the mouse, little click. Everybody was kung fu fighting. Not sure what that came from, newbie, but I'm just running with it, man. When you come with the all caps, everybody was kung fu fighting. It just takes me back. That's right, Denaloy. So NQ's movement ranging around here is not only in the middle of the current day's VWAP, right, in our value area. It's pinging around, if you look over here, at yesterday's value, right? Nothing has changed in this market during today's first 30-minute bar right here. It tests the lower edge of where the volume was, right? That's the low of today's bar. It tested the upper edge of yesterday's volume, and the open was right in the middle. That's why it's a low interest open, as I talked about, at the open, not after the fact, before the fact. Doesn't mean you can't scalp it. You just got to know what the opportunity looks like. Context is king. That's framing some context. That's framing the level of opportunity and ultimately expectations for trade management. That's the big part. A lot of us time up our trades very similarly. But what you do once you get in one that's working, that's what really differentiates you as a trader. CL pushing towards the highs. GC. Nice scratch out here, right? We got the turn off of this second standard deviation, looking for some downward momentum and maybe even get lucky. Maybe even start to see, you see where we're at over here on the weekly. Way up here, beyond 2 standard deviations from the weekly VWAP. That's quite extended. And as I mentioned, it's a retest of a key area from last week, as you can see. So, you know, on this time frame, we're going against an imbalance up on the intraday. So it's a counter trend type intraday move within a, you know, going with the trend type of bigger picture move, right? We're going up. Now the trend changes to down. These are just retest higher, retesting where we broke down from. So we'll see if we get another kind of clean looking turn and excess high and attempted beginning of downward momentum. I might bang into a another short position. But again, not a trade idea that has enough confluence across different time frames. There are other time frames that are quite bullish in this market. I've got a CVA 3375, so same vicinity. Depends on your tick size settings, and it's not a great distribution, the one I have. It's kind of immature, not filled out. The yearly, that's the real bullish one. And then on the quarter, you have like you hold VWAP and then you go to the lower development value and then you hold VWAP again, and it almost has like something of a compression type feel on it, so it's a little bullish there. All right, let's try it again here. We'll pay attention to the speed of the tape, how much momentum is present. Another well-timed entry. We just sit back and see if it works or not. As a trader, you really, beyond someone like me who's actively scratching trades and things like that, which by the way is very, very dangerous for a newer trader because you're going to be emotional about little ups and downs and you're going to get scared out of trades you should hold. So take that first. But with that said, you have to get to a point in your trading where you do all the work that leads up to putting a position on. It can start with pre-market prep hours ago. It can start with going through a checklist, making sure that it's one of your setups, making sure you're sizing it right, that risk is right, all these things. But once that position goes on, you have to get to a place in your trading where you feel a letting go, that you can't control things anymore. It's outside of your control and you don't know what's going to happen next. You don't need to know what's going to happen next to trade well over time, over sample size, over the next 100 trades, which is what really matters. The outcome of this trade does not matter. Scratching trades is very dangerous for the beginner trader. You're not yet ready to handle the additional difficulties that brings. What's my risk reward? Let's talk about that. What's my risk reward on this trade? Well, I don't really have a reward in mind. We're currently up over 1R on the trade, right? You can see where my stop is. That's not an emergency stop. That's kind of like a real stop if we threaten those highs. So, you know, at the low right here, I was up 1.2R or something, right? If we get down here to the point where we're testing this uptrend inflection, as you see, that's what the market's been bouncing off of. Developing value high, as we call it in NADRO speak. That's going to be, it's going to be 5R by the time we're just looking for a scale out. So big risk reward. People think you have to swing trade to achieve big risk reward. I very much disagree with that. I think a lot of swing traders don't time their trades up as aggressively and as tightly as some of the shorter term traders. Therefore, you know, for example, and don't connect what I just said with what I'm about to say. Tanya and Crudele were talking about that crude oil opportunity. They were talking about 2-to-1, risking $2 to make $4, right? And that's great. That's fantastic. But it's just a one case in point, if you will, about swing trading doesn't necessarily offer bigger risk reward than short-term trading. There's not one better way to do it, guys. There are certain best practices and things like that. Don't get me wrong. I'm not one of those trader Twitter folks who says everything works, you know, blah blah blah. It doesn't. You have to learn skills. You have to learn things that do work. But swing trading, scalping, that's just personal preference and what meshes well with your personal strengths and weaknesses as a person, not just a trader. You can't isolate the trader version of yourself. You are everything that you bring to the table when you sit down to trade. I think we have a little bit of a passive buyer here in gold to keep an eye on. As you see, ever since we got into this position, there's been more net aggressive selling than buying. And then as you see, price went up here and the delta was still kind of net selling. So there's a little bit of a passive buyer dominating this short-term sequence of the past few bars. So I'm going to keep an eye on that. Crude is, excuse me, NASDAQ may be chopping around, but it's sure offering a lot better rotations and movement right now than gold is. So we might flip over there and join the party for some scalps. Gold here. No, I'll bite my tongue. Pretty bad movement. So gold probably going to run the highs of that last little wick. My internal debate now is whether I want to sit through that or scratch it out prior to it. Maybe I won't have to make that choice. Sellers continue to try. I do want to be out of this trade if it runs towards those little candle highs again. Let's go check on NASDAQ as it bounces around in yesterday's value area still. Here's the pit open, run low, run high, run these highs. Funny. Back to our trade. Got my favorite mug today. Yeah, guys, I think sometimes it's okay to trade without a so first off, we several questions about why I'm in the gold short. I've covered it at least 3 times. Go back and watch the recording. Um, it's a breakout pullback of last week's volume distribution, and it's a very much an upper extreme on the weekly development value. Anyways, so there you go. You have it again. The other question was, what's your take profit, right? You don't always have to have an perfect target for a trade. You don't always have to have it. Some people don't have targets at all, and they have trailing stops. And all of their trades are never taken out at a limit order. They're taken out as a stop that trails. You push as much as you can out of the trade, whether that's direct momentum, whether that's lower highs and lower lows for a short, whatever that is. Some indicator, parabolic SAR, whatever. So for me, as I've mentioned, I'm looking for developing value high first, because as you know, this is an uptrend. I'm going against the trend. So I want to see that interaction or close to it. So here we are getting quite close. I need to have my hands on the trigger, ready to take that scale out. I could throw a limit order around here. This level is going to keep marching higher as we print more bars. I'll probably just look for the reaction and manually do it with a market order like I usually do. So that's almost all I know for sure in terms of targets for this trade. I'm looking for kind of the bottom here, or signs of it. So as soon as that buying started to come in right there, my hands went to my hotkeys. And then beyond that, for a core position, there's a couple things we can talk about. One is the weekly picture, which is that top right. We could push back towards those lows. We could push back towards the -1 standard deviation, our developing value area low for the week. Could run some stops into this extreme, or the cautious play is a reversion to VWAP. But let's focus on maximizing this initial scale out here. So let's keep in mind we're up like what, 5R or something. Again, going back to that risk reward question. All right, so we touched the level. Took the scale. A little bit of buying coming in off there. No need to overthink it. No, not delta neutral on NQ for the Globex session. Delta neutral was where those lows were on the couple swing lows after the pit session open. We're now, the last low in delta there went to like -400 or something like that. Let's see, what are the pit session hours for gold? Is it 7:15 to 12:30? What is it? 7:20 to 12:30 Central. So let's get this profile set right here on this chart if I can figure out how. It's probably the data series I need to do. There we go. So I'm guessing it's going to be like a COMEX I don't see COMEX. Maybe it's CME. Or maybe I'll do a custom one. Anybody know in the chat? Great scale out. Buyers finally responding from developing value there. This is an uptrend after all. We are going against the trend. That is the risk. I don't know. Make a custom one. Yeah, I'll have to do that at a later point. Good question up in the chat there from Gillis. If you were to actively scalp ZB, how would you approach trade location, confirmation, risk management differently compared to something like NQ? I would probably go to I think it's a slower market, at least in the sense that it definitely creates a lot of those, on a time-based chart or even other volume-based, whatever, a lot of those little just back and forth in the same exact region for a while. So I think no matter how you slice and dice it, you do have to slow things down in that market. It's just not as fast. You just can't force that if it's not there. So it does have to be a little slower. I do think that most people are going to look to secure trade locations a little better, a little more aggressively with limit orders rather than paying, which the number of ticks per range or per unit of time or whatever are so much smaller in that market. If you're always just reaching across and banging in with market orders, that costs you a lot more. In NQ, it doesn't matter. The range is so huge on any given moment, that or any given period of time that it just doesn't, if you bang in a market order, it costs you 1/100th of the range of the next 30 minutes, right? If you do that in ZB in normal conditions, it costs you 10% of the range. You know what I mean? I'm just ballparking those numbers. So probably working limit orders at extremes, kind of mean reversion, to then sync up with all my normal NADRO tools and order flow tools. You do need to understand it's a much more, because like I said, limit order, limit order, limit order. That's how most people behave in those markets. So you are going to have to use order flow in a way that looks for strong passive participation, held bids, held offers, refreshes, things like that. I like this question from Vince. Why not just take off both contracts? 5R is an excellent trade. Why not aggressively trail the stop when you partial out? First thing that comes to mind is I used to get myself in a lot of trouble trying to be cute. I'll just take off all of it here. It is an uptrend. It is at developing value high. It's probably going to bounce. Then I can reshort it from higher. Big brain, right? And then we all know what happens next. It just drops like a rock without you. So there's certain things you can build into your process. And then there are things where when you try to overthink it on the fly and get cute, as I like to call it, you're just going to hurt yourself long run. It might work a time or two. You might think you're a genius. It's too much. It's too much. You can't consistently outperform by doing that. And if you can, it just needs to be a part of your process. And therefore, you don't need to get cute versus your process. We're back to square one. So again, why not take it all off? And, you know, let's make another huge point here. And I don't mean to pick on you, Vince. I appreciate the question and you know everything. It's a great question. I'm just going to teach you guys what I know and what I believe. So why not take it off at 5R, right? It's going to take Crudele and Tanya 2 weeks to make their 2R in crude oil. You know what I mean? We just made 5R. And, you know, well, guess what? They're also not losing 1R as frequently and as quickly as I am, right? So it's an even playing field there. You don't take a trade off based on P&L. You don't set fixed targets based on R or dollars, either one. That is you imposing things on the market rather than looking at market generated information and data points as to what the possibilities are for this trade, for this context. So for me, I'm looking at a market that was retesting this region, right? We got to an extreme intraday. I reduced my risk with the threat of continued uptrend intraday. So now, in kind of more of the core position, we ask ourselves, where can this go, right? We can certainly get a reversion to VWAP. We can certainly traverse this area. Those are kind of the places that I'm looking for a bigger hold. And really, if you look, I didn't notice this earlier, the lower standard deviation for today's Globex session is just about at the same place where the one for the week is, really. Could the weekly start holding as it has a couple of little retests lower as the weekly goes imbalanced up? Could it hold here? Absolutely. That's a risk I'm willing to take. I'm calling this an upper extreme and rotational week, so I'm looking for that to continue as I trade what is. Let's check on NASDAQ. Still bouncing around? Yep. Just look at these 30-minute bars. Look at what we've done for 2 days. A blind man? Yes, that is correct. Not sure how you're even seeing the chart. The only interest rate product that I fall is ZN. Do I think GC tends to be directional when equities are ranging? No, I mean, that could be a true statement, but it's not something that I'm aware of or have seen a pattern of. Where's Jim at? Is Jim on vacation? Jimmy Cags. Yeah, I feel like ZN, it just moves a little more than ZB, as you put it. He's not slinging those 200 lots around. That's why the market's quiet. Good question by Gillis. What are core elements you would include in a daily, weekly, and monthly review process? So, first off, each of those reviews, daily, weekly, and monthly, they have a job description. It's not just the same thing that you're doing. For example, the daily review, you don't need stats. Don't tell me that don't tell me what your win percent was over the 6 trades you took on Tuesday, right? Doesn't matter. It's not relevant. It gives you no insight, no information. You might think it does, but it doesn't, right? Because there's no sample size. So, whereas the monthly review, that should be very stats intensive. You should be looking at those stats, looking at those numbers to give you insight. Let's also not forget that daily, weekly, and monthly reviews are connected. They're a part of, a continuation of what you're doing as a trader. Weekly reviews can be a great time to assess how you did that week at working towards what you said you needed to work on your last monthly review, right? So you finish up May as we're coming into June. You see the stats, you see what you did well, what you did poorly. You see what you want to set as some process goals and things you want to improve. And very importantly, you set a statistical metric that will be the key indication as to whether you succeeded or failed at improving that thing. And so you start out, you have a daily review, you look at the trades you took, how well you did in terms of executing according to process, managing risk, how good your prep was at seeing the best contextual ideas on the day, all these kind of things. That can take you into the weekly review where you can zoom out a bit. You could incorporate some stats into the weekly review. You want to see what your success rate overall at achieving process goals is. And then into the monthly, as we talked about, you really take a big picture view of what you're doing well, what you're doing poorly. Are conditions changing in the market, such as volatility, things like that, where you need to adjust maybe, sizing, tactics, things like that. What is my exact strategy? It's called NADRO, N-A-D-R-O. I have a kind of a scalping version that uses a lot of this similar tools that's very order flow heavy. You can go to apterostrading.com and find out all about that. In queue, still dead. No, Con, I did not. Make sure each day you're setting a process goal for the following day, something that's within your control, not just I want to make $500, right? Something that's you have the ability to do well, right? And then to touch on trader psychology, that needs to be how that process goal that you set the day before or the morning before, depending on when you do your daily reviews. That needs to be the defining factor for how you approach the next session. Most people approach the next session trying to win. And what does that mean? Trying to make money, trying to end the day green. That is success. Being down is failure. And if you approach your whole day of that being your definition of a winning session, you are doomed as a trader. You have to do what we teach in the NADRO course, Module 1, mental frameworks. You have to redefine what it means to win as a trader. You have to redefine that. You have to change that belief system in your mind. And it needs to be very much focused around a process goal each day. You sitting down at the chair and coming to the table to do something that's within your control. All right, so sellers kind of dominated, as you see. Not a lot of buying on this attempted move higher. Sellers dominate again. We see more buying than we've seen in quite some time off of this low. And then what have we seen into the hard right edge here? Very weak selling. So we do have an official divergence in the order flow here. So it is a spot where we can consider coming out of the trade. All right. We're flat gold. Really nice down move there. Not anywhere near what I was looking for on the core position. But I'm going to trust this shift in the tape here in terms of the lack of selling on this move. And we'll continue to monitor this market for potential additional shorts. But I mean, again, you know, what's the risk reward there on the final, let's see. Oh, that's the entry stop target. Let's figure this out. Whoa. They both expand? What's going on here? Is it a fixed oh. let's see if we got 7. Ah, yeah, something like that, ballparking it. In Q, what you doing, buddy? I mean, look at this. Another indication of not much going on in a market is when the delta is sideways, right? It's been in this tight range from, minus 350 to minus 150, right? It's just been real tight sideways, nothing happening, nobody dominating. And what's funny is I also jinxed the movement. We had all these good rotations, and I said, hey, NQ's rotating better. And as soon as I said that, it went to this sideways dead chop. No, a lack of dominance is not bullish or bearish. It's just a lack of participation, a lack of one side being in control. Either side. Now, I understand your question is a good one, 6. I think that if you are seeing delta and price track together nicely, and then you see an up move, let's say, for example, with a real lack of participation, that would be what? That would be an up move, buyers that are weak. In this context, where we're just chopping around VWAP, chopping inside the main distribution and value from yesterday in Q, and you have sideways order flow, that is neither bullish nor bearish. That is just a lack of activity. So it's a difference. It depends on how the market's moving relative to order flow and price, relative to each other. I don't know, Gabriel. I'm not an opening range person. To me, though, it would be common sense, though. If you have a very small opening range, you're more likely to see that statistically, probabilistically speaking, not continue, right? So you end up with one balance from the tight opening range or whatever, and then you end up doing something else in the afternoon. So then you have two distributions. So, it makes sense that just intuitively to me could be something. But again, I'm not an opening range trader, so I don't really know anything about that stat, if you will. Let's go to 1,000 volume and kind of focus on NQ for a moment. I certainly see a little bull flag type pattern right here. But again, it's in the context of just this, sideways movement we've had since pre-market. Certainly something of a lower trend line there as well. I'm not a big fan of diagonal trend lines. I think you see a lot of them posted on X in hindsight, just like I'm doing here. Am I going to lean on any of this for trade decisions? No. I teach footprint charts in the course. I used to use footprint charts extensively, mainly in a simple way to just see the level of the literal volume numbers, and to look for incomplete auctions at the extremes of the footprint profiles as they form, just to look for one additional signal of continuation versus completion, right? Excess forming versus lack of excess, just like any profile. But I personally, I have a lot of students who use footprint charts still to help them with the O of NADRO, which is order flow. But for me at this stage of my trading, I've simplified a little bit. I found I just didn't need the footprint chart to trade well. And so I only rely on the cumulative delta for order flow for me. Guys, for all the NADRO course stuff, just reach out to our support team. There's links to do that on our website, all that good stuff. All right, so this little bull flag just broke. You see the pop of delta. We are back into this kind of delta neutral region, so we can watch that. Not much interesting about it, though. Crude, let's see what crude's up to. Back to the highs. It's kind of established an uptrend for the session. Right here, right? Went to the low, broke out, retested, right? That's way too much volume for crude oil. Let's go 300. Got this yearly VWAP just above where we are. But yeah, crude just continues to march higher. We have several traders from Spain. And one of the very best of them is just about to launch Apteros Espanol. He's one of the very best NADRO students and people that I've ever trained. He's an ex professional footballer, and just an absolute stud. And couldn't think of anybody better to launch that. And so he's got already forming kind of a small group of people he's taken under his wing and gotten them to pass our tryout, and they're on our junior desk. And so it's just kind of this organic thing that's happening, and we're gonna allow him to run with that and continue doing the great work that he's doing. Inigo is his name, for those of you in our community. So I know I mentioned kind of the bearish inflection with crude at these prices here. Not a place where I'm going to be sticking my neck out there to do that. As I mentioned, I would like to see crude do something like start to get below this volume from the prior session, you know, and give that confirmation that sellers can start to do something, right? We don't just stick our necks out there. It may have looked like I was sticking my neck out there in gold, but as you saw from the higher time frame context, it was a with trend pullback to an area that was really important. We have a female trader on our desk that is Indian, but she doesn't live in India at this time. Yes, we have a Discord community just for students, either scalping course or NADRO. We don't want some free-for-all chat for anybody who signs up for our tryout or anything like that. It's just for students. No, we don't sponsor any visas or anything like that. All right. Crude oil is in no touch. Gold, we just came out of. Nothing really happening. Looks like we may have been a little, we'll see. It's too early to tell, but looks like where we came out right here was so far not the best spot in hindsight. That's okay. Trade management will never be perfect in hindsight. That's something I learned from Lance Beggs out of Australia. He has retired from the trading world, but certainly missed. He was one of the really real ones and good ones. And in Q, pretty nasty. ES is ES not doing the same thing in Q as? Which reminds me, we need to have a talk. Let's talk. Let's talk. Yeah, it's a little less choppy, it looks like, on the 30-minute chart. Let's ramp up the volume here to a 5,000. Ugh, maybe not. So let's talk. I'm not an expert on this, so I really want to have the conversation. Hopefully some of the 1,000 of you here are. I've always been anti correlation trader, ES versus NQ type of trading, but I hear Crudele. I wish Crudele was on right now. I'd pick his brain on it. I hear Tanya talk about it. I think Kane talks about it. I've always been against that. Let me give you my take here. If we were to plot, and I've done this before in just experimentation, but again, I'm not claiming to be an expert here. I'm truly seeking to maybe learn something. If we were to plot, and by the way, if we plot this, you have to pick a start point, a start moment in time, which adds a whoa, breaking news. I don't see S&P's not moving. What you talk about? What you talk about? That's what my 4-year-old says. What you talk about, Dad? So anyways, back to what I was saying. Just go to our website, guys. If you want to reach out to me or my team, just go to our website, apterostrading.com. Okay, so if we were to plot a spread chart, okay, of relative movement between ES and NQ, and we were to plot that on, let's say, some rolling period or a start period or whatever, however you want to do it, what would that chart look like? Thank you, Tracy, for being a voice of reason in this crazy town chat, saying there's news headlines, firecrackers, emojis. Get out of here. Okay, let's focus. Bear with me. If we were to plot said chart, I would be willing to bet, if this is 0, right? 0 representing no difference between the movement, right? They're both over the time you started measuring it. They're both up 2%. We'd be at 0 because there's no spread. There's no difference in the movement. There's obviously going to be oscillations. I would be willing to bet that the chart looks like this, right? Occasionally a bigger spike, right? So I just feel like I want to play difference. If I were to approach, like, gun to my head, I've got to trade this way tomorrow, I feel like I would try to approach ES/NQ differences as more of a mean reversion, which I think would mean shorting the stronger one, right? Buying the weaker one. And I hear everyone talking the opposite. And so I'm just I'm curious. I don't understand. I would love to understand. So somebody teach me. Any thoughts, chat? Yeah, if Deli wants to chat, I'm always love his company and hair. Crudele's coming in. He's coming in. He's gonna put me in my place. Yeah, it's way above my pay grade too. Like, I get it. Yeah, and my Serona, Ferris, I feel the same way. So Crudele has decades of experience and probably has hung out with some really cool people who know a lot about this kind of stuff. Any thoughts, my man?
So we're talking about trading the strong versus trading the weak, like buying the lagging versus buying the leader.
Of at U.S. equity indices in particular.
Yeah. And so, actually this goes back to the person that taught me. I was a trade checker for him. So I was a clerk, and he used to trade the S&P, and he would watch the NASDAQ all the time. And one of the things that he taught me was that when the S&P was lagging the NASDAQ, like if the NASDAQ was leading us higher and the S&P was not performing to the NASDAQ, he would wait to buy the weakness in the S&P, but he would never buy into the rally into the S&P. And so when I started to be able to move to the screen and I had access to trading NASDAQ or S&P, I noticed the nuance between when the stronger market was going up, you can buy at or above prices of my desirable entry because it would have a likelier follow through. And if I tried to buy
as they catch
market,
up, or the stronger one is more likely to have follow through.
The stronger one is more likely to have the follow through. So
Okay.
when we were just focused on trading S&P, what would happen was you'd see a lot of people, like NASDAQ would make new highs, and it was like clockwork, man. I swear, I used to watch all the locals be like, if it was, NASDAQ's making a new high, all of a sudden be like, half bid. 80 bid, and everyone would try to bid into it, and then all of a sudden the market would kind of come back down. And then I remember my local Louis, the guy, and he'd sit there and he would wait for some of them to kind of get a little squeeze, and he'd buy the weakness. He would never buy into the strength on an up day. Now,
Do
the
you
days that the
think-
S&P was up, he would bid into it. So that's the reason. That's where it started for me.
Do you think, though, with the advent of domination, if you will, from algorithmic trading, do you think that that's changed that game at all, or do you feel like it's as true now as it was then?
I don't think that there's a consistent level to say that one is right versus the other. I would say that the tendency where people make the mistake is that they try to buy into a rally, into a lagging market to catch up with the market that's going higher. So, for example, if the Nasdaq's making new highs, a lot of times you'll see the S&P get a little bit of a bump, and then if it's not consistently going with it in that day, it always has that quick rotation. You want to buy the rotation, you don't want to buy into the Nasdaq rally. So you want to buy on a weaker market. I've learned to buy at and below pricing an entry area that I would like versus buying at and above it. So it's just a nuance and execution, right? And so if I see, like today I'm watching the tape and I look at, if I want to buy the Russell and I get the same setup in the Russell, NASDAQ, and S&P, let's just say hypothetically that were to happen, right? And we'll bring all three of them in. I don't look at the Dow. The Russell would be the one that on the test of support or would be the one I would buy at, and I would even work the bid just above where I'd want to get in because it's the leader to the upside versus the S&P and the NASDAQ are not having that same follow through to the upside. So it's literally not saying that you don't want to be long the weaker one, but you want to be able to be better at executing the one that's lagging by being a little patient, and you want to buy the pullback. Now that's if they're all going up together. Now there's going to be days where you're going to have complete divergence on the tape where you have NASDAQ up and S&P down. That's a whole nother equation.
Yeah, one of these
versus,
spikes here. Yeah.
They're kind of trending. Yeah.
So I guess you could view it in phases, even where at the onset, strong is potentially stronger and might give you that momentum for a short-term trader. And then at some point, they're gonna mean revert, right? Like that's gonna happen. So maybe that's on the backside of things, maybe after pushes through areas. So it's interesting. It's certainly interesting because when I think of
on a mean
breaking out
reversion,
and
it's different.
What was that?
If they're all moving back together, then I would, let's just say in a hypothetical world, they all pull back together, and I get a buy signal in all three of them. I'm going to take the one that's stronger for the day, if I am choosing between the indexes.
Nice. And it brings me to one additional thing, which is this concept to me that's always made sense of breadth, if you will. If you have multiple U.S. indices that are all breaking out, let's say, that's a stronger market for potential uptrend and continuation in general, right? Versus, oh, look, NASDAQ's breaking out, but the S&P and the Dow, the Russell, whatever, they're not. Do you have any insight on that situation?
So, like, the question is if one's breaking out. So, like, if the Nasdaq's making a new high of the year, do you want to buy the S&P to eventually catch up to the Nasdaq?
Or does it give you trepidation or concern about buying that NASDAQ breakout when you have other things that are not following suit, right? So there's a lack of breadth, if you will, across indices.
Yeah, I mean, when you get into like a breakout situation, it's not something that I follow as much. So I'm not really a breakout trader at all. Everything I do is mean reversion. So the way I look at it, so everything that I look at is based upon the perspective of mean reversion. So I like to buy a pullback in every market. I don't buy into any highs. So that just doesn't happen for me. It's like goes back to the crude oil thing today. It's like, yeah, I want to buy the pullback. I'm bullish, but I'm not going to buy into the high. That's not how I
Yeah.
trade. So I look at it from the perception of, I see some people saying I've been trading the NASDAQ or the S&P off of each other for years. And yeah, they are a thing of motion. What I'm talking about is nuance in execution. When I have a tape that they're all going up together in the same amount, then it's just buy the S&P or sell the S&P because that's what I'm trading mostly. You know, it's irrelevant to me. But if I see the NASDAQ leading and the S&P is, and there's some divergence where the NASDAQ's up 1.5% and S&P's up 0.5%, I'm not trying to buy the S&P to assume, you know, as the NASDAQ's making a new high, to assume it's going to be up 1 to 1.5% or it's going to catch up with the NASDAQ. I use the weakness in the S&P to buy it because I see the strength in the NASDAQ. I don't buy into the S&P as easily. I'm more picky about where I'm getting in. I think that's the most important thing.
Great insight as usual. And a terrible exit in gold today, everyone.
I just got word that we're going to get our boy Stowe in here now too.
Get him in here. Get him in here.
Gentlemen.
There he is.
Morning. Good morning.
How are you feeling?
Oh, good. A little less weird than yesterday.
Were you sick? What happened?
I got bit by a tick, Merritt. I got Lyme disease or whatever.
Really?
I did, yeah. They finally got me. After all this yard work. They finally got me with one.
Dang.
Yeah.
So was it like was it on you for a while and you didn't know it, or did you find it pretty quickly?
So I never saw the thing. I've been cutting down all this brush and all this woods behind me, and I've been well aware I'm going to get poison ivy at some point because that's just part of the game.
Mm-hmm.
So I got a bunch of poison ivy, and I just thought that was it. And then it started to become something else, and I was like, it kind of turned into like a big bruise on my shoulder. And then Thursday and Friday, when I went for my run, I was like, man, I feel like I'm getting sick or something. And then I cut the grass on Saturday. I could barely finish it. So yeah. So I called the doctor then. And he was like, yeah, that's Lyme disease, dude. Here's your medicine.
Wow.
So, yeah. But I'm good. It's already starting to go away. Just a couple days on antibiotics and I'm already feeling better. So
Good.
Great news. I told the boys yesterday on the Order Flow Labs in the afternoon, and I said, Stowe's the network sweetheart. Okay, we need our Stowe, man.
It's funny. I didn't think about, I mean, we've been making jokes about it between each other ever since it happened this weekend. And that Nick for a tick joke, there's been many tick jokes, but that's been pretty frequent also. That was a cool divergence conversation you guys were having. It's always interesting how like differently everyone individually uses divergence to identify different things and uses that in their execution. That was cool.
Yeah. You have anything to weigh in on it?
I look at NQ, ES, and the Dow. I actually look at the Dow. I rarely ever trade it unless for the meme to make a joke on NinjaTrader that day. But I kind of view it as, so I primarily trade NQ just because I think there's more just price opportunity there in the moves because it's wigglier. But I kind of see ES as like a mediator between NQ and YM. And if NQ and YM are doing the same thing, chances are really high that ES is going to be doing the same thing. And that signifies that that's a good trend to be following if all three markets are in line. But if ES is balancing, chances are NQ and the Dow are going to be doing opposite things. So more of a, rotational day. Mm-hmm. So since I play like breakouts a little better than I do mean reversion anymore. So
to the upside.
Yeah, definitely to the upside. I'll pick out a single market and focus on it and worry less about divergences that are happening on those days.
Yeah.
That's all I do with it.
I don't look at classic I never know a market on a given day if it a percent up, percent down. It's not something I ever have on my radar.
Yeah, same.
So I look at the yearly, quarterly, monthly, and weekly long-term VWAPs, and I will
Yep.
if I'm gonna when I'm in a swing, when I'm scalping, I like the wiggly NQ, as you put it. Like I'm all over that. When I'm looking for more of a real trade, potentially swing trade in one of the US indices, I will simply compare those timeframes plus the recent market profile structure, and I'll see if one just gives a little better confluence, a little less dissonance in an area for that trade, and I'll just put the risk on in that one. That's really the closest thing I do to looking at stronger, weaker type of thing. It's not even really the same thing. So yeah, it's great conversation. I appreciate Crudele hopping in and talking with us about it and everything. It's cool. That's
Super
what this
cool.
is all about.
It's the nuance and execution. Yeah, it's the nuance and execution. I mean, at the end of the day, we're all looking at the same things, and this is the reason why some people can execute a strategy better than others, right? It's like, for me, it's always come down to how I execute the way I view the market, right? And so this morning when I was on with Merritt, and we were talking about how I'm looking at my strategy versus what you had, Merritt, on your layout, and I took my indicator and laid it on there. And I was like, wow, this will actually help me become a better executor of the way that I see it. And so sometimes the divergences, they're not strong enough to where it matters much, but it's really a lot of times I've noticed, like during earnings times, like where the NASDAQ is just doing what it's doing, or like right now, like the Russell's playing massive catch up, and you see, like these divergences where if you're trading the Russell, it's like, okay, of course I'm aware that it's much stronger. I mean, and I'm not someone who looks at it percentages throughout the day, but in the morning I look to see like what's happening within the theme of the market. And if I see that an index is leading, I want to kind of know why, or what's happening there, and then that will help me just become a better executor of the S&P, because the S&P is in the middle of that web, right? And so it feels it from all the way around. That's always kind of the way I was taught. And so I just always look at it as go, what can I do to get the most out of my strategy? Again, if we're the leader or we're all going together and we're up, I'll buy at and above prices. If the S&P is the lagger and the NASDAQ's leading higher, I look for weakness and I still want to be long, I'll buy at and below entry. So I'll give my little bit of a tweak of my range of execution. I'll trade closer to stop or further from stop, depending on, the theme of the day. And so those little things, those little nuances have helped me tremendously, because my risk is still the same. I'm just controlling my position sizing based upon risk.
No, that's the cool thing about, as long as you can always manage your risk, then you get to be super creative with your position sizing, and you get to come up with all these different nuanced ways to, get in and get out based on, targets and stuff. But all you got to do is just get that one tiny piece down, which is don't bet more than you can afford to bet. And then after that, the market's your oyster.
Well put.
That being said, I don't look at the Russell for any purpose at all, any reason in any way.
Man, I used to trade the TF. I used to swing some TF, man. That was a good market. Once it went away, they killed the Russell. Russell sucks.
Well, I just never liked.
Well, it went to
never
ice,
figure out
and then
what
it came
side
back.
of
That's right.
What the analogy is, like in a rotational market, it's just a bunch of people running from one side of the boat to the other, right? And I could never figure out what side of the boat the Russell was. I could see the NQ and I could see the Dow on both sides of the boat, but I didn't know where the Russell fit into that. So
I'm going to be honest. I don't know what the hell you're talking about right now, Stowe.
All right, fair enough. Maybe that was a book I read like forever ago, as it was, the way the market works is when one side gets crowded, it's like the market is a boat. One side gets too crowded, it starts to tip over, and then the market will eventually rotate to the other side, which is, from safety to, like, market will rotate from NQ over to the Dow because people want to get out of tech stocks and into, I don't know, toilet paper or whatever's in the Dow.
So like sector rotation almost.
Yeah.
Okay.
But I could never figure out in that analogy where the Russell was. So, but maybe I made that up. Maybe I didn't even read it.
I love it, man.
This could be the tick brain talking. There's no way to know, Merritt.
It's funny. Someone in chat said it's magic between Stowe and Merritt. I agree. When you two guys are on together, I love it. It's must see TV. Maybe we figure out some collaboration down the road. But before I let you guys go today, tomorrow we've got Lab versus Lab. You guys ready for that?
Right.
We got Leo and Kane.
I'm so ready.
Me and Stowe are gonna Jello wrestle.
Oh, that's pretty good.
Who would you put your money on? How much do you weigh, Stowe? How much do you weigh?
I'm like 205. I'm 6'1",
Oh,
205.
I'm 165 on a good day. So you've
All right.
got the weight on me.
So I have the leverage. If this was if we're talking about Jello wrestling, I'm gonna think like sumo wrestling. I'm gonna think leverage is gonna be key.
Yeah.
I got it. If I can stay low to the ground, I think I can pull this off.
I'm kind of like wily country strong though. Like don't underestimate.
No, I don't. Yeah, I'm familiar. I've got lots of family from Alabama. Oh man, that's funny.
You know, I think
mean, this network is tall. I mean, you got Kane's
way for me to exit the stream.
Yeah. I can't get over how tall everybody is. I wouldn't have had in my cards that Stowe was 6'1".
Yep, 6'1".
Yeah, I'm
I
6'1".
And how tall are you, Merritt? I've already met you in person. How tall are you?
6'1". Yep.
Yeah.
I think Leo's 6'1".
I'm like the shrimp. I'm 5'11".
It's only 2 inches, I think. That's not that bad.
I know. Well, and then we got Pax is 6. I think Pax is like 6, probably 6'4", 6'3",
Pax is a unit.
6'4".
Okay.
Kane's 6'5". Yeah.
Let's go. Are we gonna buy this thing?
I told you I'm the
Come on.
shrimp.
I've been trying to break this. We've been just cozying up against this previous day high in NQ for way too long today. That high needs to go. I'm ready to break it out today.
Good luck, man.
All right, we'll leave it to Stowe. Yep. Merritt, great job as usual. You're the best, man. Love you every Tuesday. Glad you were trading gold today. It was a great trade. I was watching that. And everybody hit the like button for my boys here. These guys are two of the best in the biz. These guys are just, not only are they great to watch, great traders, they're great people. Appreciate you guys a lot.
Thank you,
see
brother.
guys in the chat.
Love you, brother. See you.
I appreciate you guys. See you later. What is up? Good morning, chat. How are we doing on this 75-point range day? Is everybody okay? Yeah, pretty weird morning. I didn't, I didn't get anything going. It's been extremely two-way. I was just talking about hoping for this breakout, but yeah, that's just my own personal hopes and dreams. It's not something I think is actually going to happen. But yeah, we did get in. We got in here a little late, just with a 2-lot, just to kind of feel this out. It looked like buyers were trying to do something. We've been holding this area this whole time. We've retested the OR mid twice. We're holding the RTH open. We're holding the Job pivot, which is, something I always look at. And, we came down, got the weekly VWAP. It's only Tuesday. Weekly VWAP is not that important to me yet. I like to wait until Wednesday before I start to give it that much credence. But yeah, we're kind of running into this OR high here now, trying to get through these lows for higher, but I don't know. It's 11:04. Maybe Europe can close, squeeze us off at least a small scalp here. But yeah, good morning. How's everybody doing? All right. Yeah, previous day high does need to go. Frontier, it needs to go. Yeah, XY, how about this? I think I took our range that we normally get stuck trading at the end of Tuesday, and for some reason it's happening at the beginning of Tuesday. I don't know why. Yeah, I don't know. But I'm in a free trade here. I'm trying to get to overnight high with this. I know that might seem like a lofty goal, but I don't see any reason why we can't do it. So I'm just going to keep this. This is just going to be a free trade. Win, lose, or draw. We'll tuck it under. We'll tuck it under that little candle there, and then we'll see if Europe close can get us out of this mess. Morning, Tracy. Thanks everybody for asking if I was okay. Yeah, I'm totally fine. By the way, in Pennsylvania, tick stuff is like you grow up with that. You know to always look for ticks. You know to to go to the doctor if you get a rash or you start to feel like garbage. So yeah, it's just a pretty common thing. I'm surprised I've never had it before. It's so common. It's actually so common that when we find ticks on ourselves, it's more cost effective to mail the tick away to a lab and they test it for you than to wait the 2 weeks to see if you get the rash. So of all the ticks I've ever mailed that all came back negative, the one that I found or never found on me is the one that actually had Lyme. So how about that? Wasted, I don't know, $100 over the lifetime. But that's how that goes. But yeah, the antibiotics work really well. I rarely ever take those things. So when I have to, it's just like, I find that it just destroys whatever I've got. So that's good. And no superpowers yet that I know of. I know a lot of people have asked that. I was a big fan of the Tick TV show that was on Fox when I was a kid. I don't know if anybody watched that on Saturday mornings. The Tick. 1990s. Also, I think X-Men was on. It was like Spider-Man, X-Men, The Tick, Super Dave. I think that was the TV lineup. I was thinking about that, Jeff, for real. Imagine a time before antibiotics. You're just like, well, I got bit by this tick. I guess that's it. It seems like a super bummer. Oh, Lord, we're rejecting this. We're rejecting this +1. Oh, no. Are we going to be in this range all day? Oh, painful. Hey, Amin. Nice to see you. Yanis says, hey, Sto, can you tell us how you prepare your trading sessions? Yeah, it's super easy, super fast. I do it with everybody as soon as I start. So let's just go. First thing I do when I load up my chart is I go back here to 3 a.m. in the morning and I see what the European opening range did and see if there's anything I can glean from that. And not really. It got chopped around a bunch. It's not a clear pivot to me, so I don't know. It seems like short below was working for a while, and then long above. I don't know. It wasn't a very, very big range, so I didn't read too much into it. Yeah. This is what I'm more looking at. It's what happened before that. So I don't know what this was. I don't know what this was, but this is pretty gnarly. This is some low liquidity rudeness going on. So I don't know. Somebody in Asia session was up to something. Some news happened. Could be anything. But I mean, we've got the overnight high, like 100 points away? That's a sick target. Or we have the overnight low 100 points away. So in times like this, you have to be wary of, the fact that you're trading a tiny blip within this massive Asia session. So you got to be prepared to let go of your bias and just get out of the way if something breaks. Because this is wound pretty tight right now. Yeah. To put it lightly, I would say this is wound really tight. And we rejected the +1. We rejected all this absorption up here. Not great signs for me in this long idea. But that's really all I got. So we've got a lot, like the big two-way trade here. Jump down to 1. I'll put another one on. The big two-way trade here is like all of this bid delta stacking up, and then all this offer delta stacking up. So we're just playing the edges of this thing until one of those edges breaks. And in general, I'm leaning bullish, higher time frame, leaning long. It's easier for me to play. Plays to my strengths. We're long above the European 30-second OR. So for now, that's what I'm going to try to pull. I'm just going to try to look long, scalp some base hits. But I mean, look how small the range is. I'm down to 5-point increments instead of 10 on my on my price axis. That's never good. That is never good when that happens. So yeah, Yanis, that's pretty much all I do. I don't really do anything crazy. I try to think as little as humanly possible. And part of that is having like pretty uniform main prep, just run through it. And I've been doing it for a long time. So it's kind of just like, it's at this point, it's just like a 5-minute glance. And we see what we're trying to do for now. But hopefully we can break out of this thing in one way or the other. And we can start to see, I don't know, literally anything happen would be good. And then we can talk about that. But there's no news. I guess Trump's going to talk at 4. That's all I've got on my calendar. ES is in a 15-point range. I mean, it's been doing a lot of business at this 60-25, which it needed to break. I mean, it's at least making higher highs. And that's what Merritt and Deli were talking about earlier, is just you get into that divergence world and try to glean something from it. All right, let's see where this ad was. This ad was at 61. I'm trying to get that guy up there at 76. I don't know. Maybe 15 points is asking too much today. Oh, Chad, you know about the tick? Awesome. Sick. Great show. Good. Yeah, Omid, Super Dave. Lots of people forget about Super Dave. He also had a great character in Arrested Development as the surrogate for George Sr. Very, very funny comedian. I don't remember that dude's name. Matt, cheers from Brazil. Hey, bud, thanks. You want me to trade gold? Yeah, okay. I don't know, homie. I don't know if I can take like requests for for markets to trade from the audience. I don't know. It's not quite like play Freebird. If you don't know Freebird, it's like actually that would be exactly what it would be like. And I don't know Freebird, so. Yeah, Dan, that's the thing about Asia session. It's always worth looking at, And like the only time I don't spend too much time on it because I don't want to sit here all night. And like, I can rarely make it. I get super tired. I mean, I wake up at 5:30. So if I'm up past 10:30, it's kind of like an achievement. So, um, yeah, so I never make it that late into Asia session, but sometimes there's some very scalpable stuff. And my only real criteria for it is, does it look like RTH? Is it acting like RTH? Then I try to scalp it like RTH. And normally you find out fairly quickly if it's going to be successful or not. Also, I lean heavily on limit orders in Globex. U.S. and China have concluded talks. Okay. Do you guys think it was good? Do you guys think it was a nice talk? Is it over too early? I learned stock says, if you do not mind, can you show us how to set those two histograms that are vertically aligned to the right side? Yeah, so you don't need level 2 data for NinjaTrader. So this is kind of two questions. So, all right, so I'll tell you what these are. So the blue and red one, this is an Orderflow Labs tool. This is called a Delta Volume Profile. You have to have the Orderflow Labs suite in order to have access to that. This is a volume profile, which is just volume. It has nothing to do with Delta. This is an Orderflow Labs tool also, but there are many other ways to get this. Like if you have the order flow package with NinjaTrader, they have a volume profile. If you have, Jim mentioned it forever ago that there were, several other third parties that have that license as well. Oh, nice. We got our ad off. Sick. We thrive in a 75-point range. Oh man, I am feeling better today. That feels good. When you get sick and then that first day you start to come out of it and you feel like, oh man, I thought I was never going to come out of it. Yeah, feels good, man. But anyways, to answer your question, I learned stock. If you, if you get these from Orderflow Labs, there are very detailed instructions on, how to set these up, how to put them on your chart, and how to, configure them to make them do the things that you want them to do. So I hope that helps. Diego, nobody is missing the long hair. My wife's not missing it. My kid missed it for like a day. Anytime I change it, because I get I don't know, I get lazy. I only shave like once a week, maybe. I let my hair grow too long. And so whenever I change something, my kid's like, Dad, I loved your long hair. I was like, no, you didn't. You're just messing with me. Larry says, sorry to hog the chat. No worries, Larry. There's plenty of room in here for everybody. Stowe, this might sound dumb, but when you speak of taking 20 points, do you mean ticks? No pun intended. Nah, that's good. That's a good pun. Handles or something I don't get. No, points. So a point's a point. And sometimes depending on the market, it is, sometimes a point is also one tick. So it can be confusing. I can explain it. In NQ and in MNQ, the way that this works is it trades in increments of 25 cents. So a point is one, unit. $1, that's 1 point. So when I'm talking about taking 20 points, I would say, 861 to 881, that's 20 points. 20 points also being 80 ticks. You see what I mean? However, on the Dow, it doesn't have, it doesn't trade in quarter increments. It just trades in single unit increments. So 1 tick on the Dow is the same as 1 point on the Dow. And all markets trade differently. ES and NQ are the two primary ones that I look at. And, those are quarter a tick, quarter point a tick, or, four ticks in a point. Yes, Corey. Permission granted. You may go golf. You are welcome. If anybody else needs permission for something, just let me know. I'm happy to grant it. I'm feeling very generous today. I don't know if NinjaTrader has a delta at price indicator. I don't think so. But there may be other options to get them. I'm not sure, but this is the one I use everywhere that I go. It's an Orderflow Labs tool, and it's indispensable to me. So, WizKid, no, I do not use a footprint. I'm not able to look at a footprint and glean anything from it. I use a depth of market, which I have up on a different screen. It's doing a bunch of wiggly things. And inside of that is I have two columns called at bid and at ask. And those kind of serve like real time refreshable footprint stuff for me to see. So I can see, imbalances, and I can see initiation with those two columns that I think that some people get from looking at a footprint. Oh, good Lord. There's so much absorption up here. This trade's going to come back and smoke me in the face. I got that vibe. But yeah, no, I don't use footprint, but that's just because my brain doesn't look at it and see anything. I think that there's a lot of stuff in trading like that is extremely personal just to, the pattern that you're able to recognize. So, I know XY uses a footprint. Leo used a footprint for a long time until he built a bunch of tools to automate the stuff he was looking at the footprint for. So yeah, it's still a great tool. Lots of people use it. Oh, you're welcome, Yanis. No problem. What news calendar do I use? Orderflow Labs actually has one that just populates. I think that they grab it all from. Actually, I don't remember. But you can go to. There's lots of news calendars out there that are free. You could just look up like Financial Juice or Forex Factory or. I don't know. I'm not affiliated with any of this stuff. I just think those things are free. So if they happen to not be, don't yell at me. But just Google it. You'll be able to find one. Oh, Forex Factory. There you go. Nags, do I change the volume chart to bigger or smaller based on volatility on NQ? No, I don't. I just like 750. It's good for RTH. And I don't like to change it because I don't want to start like moving the volume around to fit the thing that I'm trying to do. I want the volume to come to me, if that makes any sense. So, trail this guy up to here. Yeah, I don't do that. So right now we can clearly see it's extremely slow. So if this speeds up, like if we leave this range and it accelerates, we'll be able to see that, and that'll be reflected in the speed that the candles generate. So that's why I like to keep it at that baseline, because I've looked at this for a long time. I know what it looks like to me. So that's why I try to keep that baseline in mind. Oh, wow. What a horrendous day. At the end of June. I know. NQ just keeps rejecting that spot. We either take it out or these buyers give up and then we puke. We'll see. Or we just stand here. That's also an option. Nothing is always an option, so never rule that out. Tom, I'm actually not in control of the trading gods. If I was, I'd be doing a whole lot of different stuff right now. than just chilling in one MNQ lot, trying to see if this range breaks. but I'll put in a word if you want with them and try. Yeah, it can't hurt to ask. I don't know. There's some wiggling. Oh boy. Look out. Someone's saying something. Someone's talking about the talks, perhaps. The best talks. You should have heard these talks. There's never been any talks like this. We had to fire Elon in order to have these talks, probably. That's what's being said. And stuffed again. Yeah, well. Oh, thanks. I learned stock. Do you need? Yeah. So level 2 data is I'll just try to show you if I can. Pretty sure I got level 2 on here. No, I don't. I only have top of book on this one. So level 2 data just shows you the bid and the ask up and down the price ladder on a DOM. So you don't. I don't believe that you need level 2 for any of these tools. At all. You should just be able to get level 1 and that's fine. Oh, wait, the talks are still going, Tracy? Okay, great. Cool. Are they over or are they still going? These turkeys, I tell you. What a gig. What a job. Okay, you guys all like Forex Factory. There you go. Cool. So party on. Yes, Sir X trade 6X trading, you may leave the office early. Have a good time. Get some ice cream on your way home. Enjoy yourself. Tom Harrison asks, Stowe, what sign do you look for early to suggest days like today and yesterday will result in this kind of trade? What kind of trade do you mean? Do you just mean like just balance days? Tom, can you clarify that for me, bud? I just want to make sure I know what you mean before I answer you, bud. Oh, no, you don't know you're going to be in this dumb mess until you're in it. But while you're in it, you can see lots of stuff. Like for example, the range is tightening. You can see, I mean, you can just see it's just wound. This is a balanced profile. There you go. Now it's getting spicy. This bid delta down here is being supportive. This offer delta down here is being supportive. So, you can kind of see, and you can even do some quick math on these numbers, and it's about the same. So you're seeing equal buyers, equal sellers up here. And this is just an auction. This is price is too low, price is too high, price is too low, price is too high. So until one of these people is wrong or decides that, they no longer want to have that view of the market, it's just going to sit in this range. So they're going to stop me out here. I might have to get right back in. We'll see. Gotta eye this. Offer is stacked on. Did I move down to 2? I did. Could break out. Gonna keep a tight leash on it. A lot of bid down there too. Hmm. Let's see. Sellers can pull this off. So 11:30 right now. So that's the London close. There's our turn. That's a lot of bid being absorbed. So our mid touch. Oof. There we go. All right. Okay. Now let's wait. Maybe getting some range expansion. We need some follow through. We need a passive seller to step in here and just step on the thing. If we're going to get out of this. Ooh, that's a bad fill. Looks like passive seller came in there at 835. So I need this spot to hold. Oh, the bid's doing something. Need that seller to stay there at 835. Or else I'm going to bail on this idea fairly quickly. I'm only in 2. Okay. Whoa! And there it was. There it was. That was a 6 short. That was awesome. All right. I feel great about that. I wish Jim was on today so you could see that short. Somebody record this for me. Oh, wait, it's on the thing. Savannah's recording it already. All right, cool. So what did we learn? Let's talk about that. Choppy mess, right? We're all complaining about it. Total nightmare, right? Two-way bid. Everybody absorbing here, everybody buying this. What happened as soon as this thing was lost, right? Whenever you're wound this tight, you're gonna fall or moon out of this thing if somebody gets aggressive. And what we did, we were leaning long, which is fine. We got a couple good scalps out of that. Leaning long, and we lost the long. We got stopped out. And then, price broke below, and I saw this passive seller right here. Came in, and when price tried to come back through the RTH open, the pivot, all of those places, nope. Someone just stood there and said, nope, I'm going to keep selling it and keep selling it. And then buyers gave up, and they lost all of that momentum. And, I got my second fill was here at the weekly open, but that's just where my bracket was. I didn't have a chance. Didn't have a chance to take it all the way to the overnight low. So that's how you can, if you're fast enough and you can catch that passive support in those moments, you can get a quick short ad like we did right here. If you can see, we got stopped out and then immediately got short. Short ad, very tight, and then we caught that whole puke, which is cool. And that brings me great joy. So now I don't know what's going to happen. Obviously, a seller is very mad. Maybe the talks did conclude. Maybe, who knows what's happening right now, but there's definitely some big violence. Somebody just lifted 350 lots at 780. But that's cool. I'm so happy that I was able to show a good live example of okay, watch, let's wait for this and we can get in. And, we had a super tight stop right here. Just like if this guy holds, great. And we got the push. Cool. Corey, you didn't golf? Lame. You asked permission and everything. And now here I am giving people permission to do stuff they're not even going to do. I feel like that was a waste of my authority, of which I have none. So now we're kind of just chilling. Let's see. This was a pretty low liquidity move, so this could easily get squeezed back through. This it's also moving quite fast. I'm just going to let this be. For now. And this, whatever this dude's doing is obviously something. We can pull up the high time frame for a second and just double check our stuff. Yeah, I mean, we kind of puked back down to the bottom. Yeah, so we hit that, basically just tap that bottom of that value area again, and then so there's no real high time frame support to be on. So that was just a quick day trading scalpy move, which is cool. It's worth noting that we're below the weekly open, so we'll watch this spot. Also, now we're below the European 30 second opening range. But yeah, I don't want to step in front of this if this is going to get squeezed off. Which, yeah, see how hard it is to be a bear. See how hard it is to short. It's quite rude what they do to bears. No, XY, we passed contracts to each other. That's nice. We didn't even try to do that. It's not even afternoon yet. I mean, we swept the previous day low. It's not, I don't have enough. I don't really have much left for this. So this is a good example also. Something that will eat you alive if you're not careful is, getting married to something. So when you see this violent sell, which is what that was, it's worth taking a pause when that stops and seeing is this context changing? Did that just run some stops? We went down and we got to the previous day low and we bounced, which is down here at 750-ish. We saw a lot of buying here that has been supported so far. It was retested a couple times. So if the day is going to change context, and this was just a quick sell, we don't want to get stuck trying to, short this without any additional thesis. So our old trade is over. Now we're looking for a new trade, and that trade could be maybe this is grinding up now, or maybe it's going to reject the IB low or reject the RTH open, some sort of something. We still need some additional context, but also right now the bid is flying around. So I'm not interested in getting into a short while they negotiate this between themselves. What goes on? My chart, Top Step X, shows we didn't take previous day low on NQ. Well, I don't know how to tell you this, but we did. So it was 750.75 was the previous day low, and we traded it. So I don't know. This is where I'd kind of look for the sellers to continue right here if this is going to be a trend down day. Got back to the OR low, also the -1. Yeah, I don't really see it. Yep, no trade for me yet. Vol, what is SOXL? Is that a levered ETF? Jeff, don't think this. Jeff says, man, I could have targeted much lower. I was just trying to get it to bust that range. Don't hindsight your trades like that, dude. It's not good. No good comes from that. Trust me. Take the points that you extracted from the market, start looking for your next opportunity. If you want to go back through your planning, if you want to do some homework on, your executions and find a, quantifiable way to determine that maybe you should have gotten more points out of that trade, that's cool, but don't just do it. Don't just do it because you see the price went lower, because that you didn't know that was going to happen until it happened, and you can't trade like that. It'll chew you up. I promise, because it has chewed me up. I don't know what this is going to do. I'm kind of just stalling out right here. Just a different kind of good tunes today. Got the Jason Isbell radio going. Feeling good about it. Nope, we did not take out the overnight low. Just the previous day low. Okay, Corey, go ahead. Get golfing, dude. Thank you. And I will watch out for ticks. Actually, I was wondering if I should am I like tick invincible for like through, does this give me some sort of like, can I just go out there and just clean out all the wood stuff and just, take on all the ticks, get as many tick bites as I can? I mean, that's pretty gross. My wife would probably be more than uncomfortable with that, but oh yeah, I was talking about RTH low. I don't look at so you look at like the previous day's overnight low. Okay, what goes on, and by that I mean like your username. So you don't need to rethink anything. They're just they're two different pieces of MGI, right? One is the previous day's low, which is the the regular trading session, and then one is the overnight low, which is last night's low or Globex low. And yeah, those are just two different things. It happens that they're right next to each other today, but that's not always the case. Yeah, the overnight low is 732. Also, a very valuable piece of MGI. But yep, those are two separate things. That's all you got to know about that. Stow for another tick. I'll get more ticks than Nick. I probably have more than where he lives, honestly. Rizoa, hi Stowe, what is giving you all the high, low, opens, etc. markers? That's just an order flow lab study. It's just called MGI, and you can ask it to tell you, you know, lots of different MGIs. Whatever you want. Sky's the limit. I try to limit it on this. If I was to show you how many I actually look at in real life, it would just plug this whole screen up and you'd never be able to see anything of substance. But you see what happened after this liquidation? This is grind. This is grindy pain bid back up. And anybody that's trying to catch this continuation right now is just having a sad time. So that's why we were not in a hurry to get back in. Because this was a flat VWAP. It got happy for a second, and then you can see it flatten right back out again. And if we're going to go anywhere now, maybe come back and test here, I'd be willing to buy a pullback to get us back into value. But yeah, this is grindy world. I'm not going to get into a short here. Don, I'm going to get those goats. Hopefully. I don't know. Lady hasn't written me back, so how busy could the goats be? Maybe super busy. I don't know. I guess I would be a deer. Do they get sick though? I thought they do get sick. They just like don't really know about it. I don't know. A deer doesn't really have anybody to tell when it's not feeling good. So maybe deer doesn't like having Lyme disease either. Have you ever asked a deer how it feels? Me neither. GK, my volume profile setting is for RTH. So this is just the New York Open to 4 p.m. Eastern time, or the Chicago Open if PAX is listening. Diego, hey Sto, how do you decide whether you should be short or long? I had vibes basically. I don't know. I'm kind of like I'm long on like a 2-week time frame. So that's why I was scalping these longs. Keep in mind, I'm only half size here because this is like the world's smallest range, and either we were going to explode to the upside or to the downside. I just preferred to be long because we were above the, you know, all the reasons I explained at the beginning of the chat. But then I flipped short once, you know, we broke, because when you're going to break out of this thing, chances are you're going to puke. So I got in a very tentative short here. And I mean, I'd like to be long now, but there's no way to get into a 45-degree line. So we wait. But I don't really look at much MGI for that. I mean, in this scenario, like if we were well above the 5-minute opening range, if we were above the IB high, that would help. But now we're just back in, you know. Basically, we just liquidated out of that balance, floated right back up into it, and then here we are. So you can't even change it to RTH? That sucks. Sorry for that, bud. Yeah, I don't even know. I've never heard of tracking the. So what it counts like the entire yesterday's 24 hours, and then it shows you that low. So if that low was created in RTH, it's going to show you that. And if it was created in Globex, it's going to show you that and just call it the same thing. Because that doesn't make any sense to me. There's got to be a way to do it, man. there's got to be a spot on there. You can't get RTH either? That's insane. Yeah, there's probably you can probably figure that out on something for free just to be able to see that. I would try. Don, I would buy some goats, but I don't know. Also, my wife is creeped out by the goats, to be honest. I can tell you that because she doesn't watch these shows really, I don't think. Unless she does secretly. And I've just never said anything that I needed to be yelled at for yet. I don't know. But yeah, she doesn't like their eyes and that they blink sideways. You know what I mean? Which I get, They can be a little, I guess that's creepy. Okay. Interesting. Well, I mean, it was a decent trade. I might have to size up on these days. I don't know. If these ranges are going to get small and we're going to get into summer world, yeah, I'll think about that. So something that happens that you have to do, just like you have to size down to adjust to high volatility, you also kind of have to size up to adjust to low volatility and low ranges. So I'm going to keep my 2 to 4 lot maximum MNQ sizing for now, for at least the rest of the week and beginning of next week. But if we look at, let's look at our stats next Monday and let's compare to the week before that, because I feel like last week was a really good baseline of my best, because I was really trying. Not that I shouldn't always be really trying, but I was really trying last week to not suck. So let's do that. We're going to look at our stats next week and compare them to this week. And if we notice our, number of trades is way down, if we just notice any of our frequency stuff is down, not necessarily our win rate or profit ratios, but all that other stuff, we might have to figure out how to sneak a little more size in if we're going to be taking less trades. I don't think so. 2020. Yeah, rogue shots. Good point. We are getting into rollover week is going to be around the corner, which is not fun. It's not a good time to trade. Dan, I'm not going to buy goats. Don't worry about it. I have 2 cats that basically do nothing, and that's kind of enough animal for me right now. I have a 5-year-old who is wild enough for everybody. We don't need any livestock. Wait, Don Argamane said maybe just buy 2 goats. Kids love them. Is that a dad joke? Is that a pun? I'm pretty sure. Baby goats are called kids, right? Am I making that up? Do they eat cardboard? That can't be. You can't feed goats cardboard and feel good about that, right? That's not okay. I can help you with that, Mario. So, do you know how to eliminate the pop-up tabs on chart trader after order is executed? Are you just saying like, that just shows you where your order is. All right, you can just change that stuff in. You just have to go to your data series, which is here, and select the one that you're trading. If you have two like me, and then it's just down here in this trade section. So you're just going to change this to do not plot. And I think that should do it. Pretty sure. If that's what you're trying to get rid of. Also, you can right click on the chart trader itself and go to properties. And it might be in there if you're talking about like once you're in a position showing the position itself. Right click on the chart trader and go to properties and poke around in there. Jeff, there's no way to know if that was caused by a bond auction or not. It was just like there were a ton more sellers than buyers right here, and buyers said never mind. And then these buyers said actually we do mind. And so we got a complete V. It's the most annoying. This is like the Trump hockey stick meme V. No entry at all. Yeah, Curtis, there's nothing left for me to do here either, bud. Yeah, I don't have any edge here. We got to at least get to an edge of this somewhere down here for me to want to party. Yeah. Yeah, it's a fair bit of volume being done up here too. Again. And now we're just like, are we back to this same two-way trade we were in before? Sell, buy, back to the world's most fair price ever? Possibly. We'll see. I'll be on with XY in the afternoon at 2:30 Eastern. And, Tracy will be on to do hot commodities, I think. I'm pretty sure. I was sent the show run for the day. So the fact that I don't know that is on me. But yeah, I'm pretty sure Trace will be back to do hot commodities. Maybe Deli's coming back on in the afternoon with us too. That would be cool. Ah, there we go. Thank you, Tracy. I knew it. Girl trader, where's Leo? Great question. Leo's going to be on for lab versus lab tomorrow. Leo's got to trade like 9,000 years tomorrow. I think he's going to trade like, he's trading the open through noon. So he's doing, him and Kane are doing 2 segments worth of time. Hussein, I'll try to answer that real fast. What's your trade management and position sizing style? I don't know. I try to risk about 1 to 2% of my total account balance on any given trade, which for this account is around, $120. So that gives me, and that's my max risk. So that gives me a, available risk of 4 MNQ lots with a 15-point stop loss on the whole position. So I try to work within that range. ASM, you can do that. The way to set that up is you just have to add a different data series. So if you go to your data series tab, you can add more than one. And the way that I do this is like all of the stuff that my order flow labs things are pulling from, that's all NQ data, but I have MNQ on here and just set to transparent so that it's not showing anything. It's showing no MNQ data, but I am able to select it in the chart trader. And so you can trade MNQ via chart trader while looking at NQ, MGI and candlesticks, etc. Ah, there we go. Now we're partying. Are the talks done? Oh, fair enough. Is it already? Kevin, I just saw Kevin's joke. Oh, man. All right, so the show's over, and I'd like to leave you with the production team's excellent pun of deer just take antler biotics for Lyme disease. So I hope you all had fun. That was cool. I'll see you again at 2:30 at my buddy XY. Everybody have a nice lunch. Don't get chopped up. And yeah, see you in a bit.